Good morning, everybody, and welcome back to, well, at least my first stream after the little Christmas holiday that I had. I hope everybody's doing fine. I hope you got some nice time to relax over the days, that everybody got a lot of presents. And I want to welcome everybody who took the time to directly after the holidays come here to the first live stream of the Fivers and one of the last ones, of course, for 2025. But we want to go out with a bang, of course, and we want to see if maybe we can catch some nice trades out there. And let me see quickly who is with us already this morning. We have Subhajit Mondal. How are you doing, man? And we have Vainilvan 11, good morning. Happy Christmas to you as well. And thank you for your kind greetings. We have, of course, our nurse from Australia. Good evening, Henry. How are you doing? Good to see you once again. We have Infinity once with us again. We have Kim De Beer 3038. We have Michael with us. And we have a nice announcement, everybody, because we still have this nice little flash sale here at the Fivers where you can get your high stakes account with $2,500 on it for only $12. And this offer is going to end on January 2nd, max 2 accounts per user. So if you ever planned to get into prop trading, if you wanted to maybe try your trading strategy in a live trading environment to test, do you have what it takes to become a funded trader? This is the chance for, I think, what can be considered as very, very little money. And yeah, basically, I'm not going to say it's almost for free, but it's close to being for free already. So this could be your chance at a slim budget to get into the world of prop trading and later on have a funded account. So January 2nd, this offer ends. Best is if you go already right now into your dashboard on the Fivers homepage and get and secure your account. We have Solomon with us as well. So in half hour or 20 minutes, as a matter of fact, it is now, we are going to be joined by Jonatan as well. And we're going to hear what he has to say about what we can expect for the rest of the year. We still have 3 trading days, obviously. One thing we can for sure expect, or actually 2 things, in my opinion, we can expect are that liquidity is going to be probably somewhat lowish. I don't want to say it's going to be low, but it's going to be on the lower end, just like we experienced, of course, over the Christmas holidays as well. The second one is that usually the year likes to go out with, I'm not going to say a bang, but on a positive note, at least when it comes to indices. And so usually what you'll see, for example, in the S&P 500, in the Dow Jones, of course, in the NASDAQ, also that is true, of course, for other indices in this world, is that the last days of trading during a year are used for what is called window dressing. Window dressing meaning that institutional traders out there, especially mutual funds, so the funds you invest in, for example, managed stock funds or something like this, mutual funds, that they like to be net buyers by the end of the year for something that I just mentioned called window dressing, because they want to show on the box that on the books by 31st of December 2025 that they are mainly invested in stocks, that they're not sitting on a lot of cash. And this is actually statistical significant because there's a 78% chance, if I'm not completely wrong, that the last days of a year are positive. So yeah, we can see. We'll wait and see what that has in stock for us today. However, if I have to make the choice, so for the last days here, if I, for example, translate this to an asset that I like to trade, which is the NASDAQ, I would rather prefer being long. We can see already this has been true since December 18th already, where the long signals here from my strategy worked very much better than the short signals. So the profit here was of the long signals. That is due to this phenomenon of window dressing. And so, as I said, 78% chance of that being the case again. Of course, we need to wait if we are within the 78% bracket or if we end up being in the 22% bracket. So, guys, what's your plan for the end of the year? Are you still in some positions? Anything you would like me to look at? Otherwise, we could do a little AI coding session if you want. So download some indicator data and let, for example, an AI look over it. If there's an edge, I could show you how my approach for that is, how I use AI or language models to analyze data, to analyze the stock markets, to analyze performance of indicators, and so on and so forth. And yeah, so very much open. As I said, in around 20 minutes, we're going to be joined by Jonatan as well for an hour. So then I want to switch, obviously, to something else. But in between, we can do whatever you guys like. Yeah, maybe we start by getting a general overview of what we're seeing. As I said, NASDAQ more on the short side, so stocks losing a little bit of pace this morning. I started on a more lower note. However, as I said, I kind of expect this to turn around later this day. And of course, probably you guys also invested in gold at the moment with positions in gold, has actually seen quite a large slump already this morning. So it's going to be interesting. Everybody, including myself, is of course looking at these levels here. So where the former all-time high was, I think a good strategy here potentially could be if we really dip down. Let me get this tool here. If we really, maybe not today, but maybe tomorrow or maybe even on the 31st, who knows, if we really see a dip down to test this area of a former all-time high again, to kind of play the strategy of re-entering there with a buy. So if we test this area, which was our former high again, I think that is, for example, a trade, in my opinion, that is valid. Why is it valid? Because the upside potential for a trade like this is higher than for the downside potential. So let's say you enter, not exactly, you should place it a little bit above the last all-time high for the bounce. And then you, for example, what I would do, I would say, okay, if we dip down half a way between what is now support, so the yellow line, and the blue line, which is the moving average, the exponential moving average, 8 weeks moving average. Sorry, it's a simple 8 weeks moving average on a daily chart. So half of it maybe, and then see where can we get with a risk reward ratio of, for example, 2 would be, of course, new all-time highs. However, if we get reflected, there's of course a high chance that we are going to see new all-time highs. And who knows? Maybe gold really wants to stop here on a very high note. We don't know yet. Time will tell, but for sure, this is a trade I would be looking. Everything in between here, in my opinion, not so interesting. As a matter of fact, my preferred trade always would be here the touch of the 8 weeks moving average. And if this one doesn't hold up, then the bull market support bands lately here. Let's see if we get like from fear zone and greed zone. Yeah, this is kind of interesting. So you can see here this indicator called, which I sometimes like to use, and I'm never use it as a standalone indicator. However, it's called greed zone by somebody called Zairman. I think they sell a lot of indicators as well. However, this one is free. So if you go up here and you type in greed zone, greed zone like this, then you get this indicator, greed zone indicator by Zairman. Pretty good, can be a good indicator for confluence or to kind of get an idea when are things getting dangerous. This one signaling also that, we are a little bit too much into greed. However, I said don't use it as a standalone indicator because you can see in gold sometimes it takes just a long time until gold finally starts reacting to this. So never use it as a standalone solution. It's always something that can add to the picture. So you want other stuff indicating here as well that we are prone for a downside move. As I said, I would always prefer the bounce back to the area of support here, our former all-time high, and then not the bounce, with a pullback to the former all-time high, and then a bounce back. Good. Yeah, Henry saying Bitcoin giving some good moves to ride. Yeah, it's a bit crazy again what Bitcoin is doing. It's like this. I don't want to say disappearing into nothingness, but pretty much it is. Like nobody is interested in Bitcoin anymore, and then suddenly it does what Bitcoin likes to do and jumps up like crazy, But I mean, look at this also. That is a typical sign of a bear market, actually. We had this nice move up earlier this morning. Let's go down to the hourly maybe and adapt this a little bit to auto fitting. So we had this nice run up here this morning. Actually, it started yesterday evening. Before I went to bed, I saw some of those candles yesterday where we, pardon me, went up by 3% just to crash down again. And in my opinion, this is really the state of the market currently. We're in Bitcoin, and this is also the reason why I, except for a tiny little amount, have sold all my Bitcoins over the course of the last year. I think I averaged out at like 96 or 97,000 US dollars. So I also didn't catch the top, obviously, there. But tops and bottoms are notoriously difficult to catch. But this is a typical sign of a bear market or of a trending market to the downside, I would call it. And by the way, if you are working here now with those bull market support bands, they also work very well as bear market support bands. So if you kind of follow my line of reasoning here for Bitcoin, what you should do now is, and in a sense, we saw that already this morning, take the 8 weeks moving average and as your first line of entry where you short, where you do a swing trade short. If that one breaks, then your second line are the bull market. Or in this case, we should rather call them bear market support bands. That's the beauty of this concept. This is why I like to repeat myself over and over and over again on these streams, that they work in all trending markets. I talked about this, I think last week it was a lot as well, that in gold, this 8 weeks moving average works really like a charm. If you are, a little bit afraid to enter there, well, then you have to wait until we touch the bull market support band, which was the last time back in August of 2025. And if you took this as a signal, you entered gold at 3,325 to 3,350 US dollars. So beautiful trade. If you held on to that, of course, which of course is a whole different story then, but they work very well in uptrending markets like on gold, but also in markets that seem to have entered a downtrend, like this is the case, for example, for Bitcoin. Very characteristic, lower highs, lower lows. So naturally, the next lower low should be somewhere below 80,000 here. And when I see wicks like this to the upside, like it seems like every time we try to gain momentum to the upside, but at the moment we immediately get sold again. I mean, that's quite a volatility, We go like within a couple of hours, like 3.5% up, just to immediately be bashed down again. Stuff like this you only see in crypto, or as a matter of fact in gold as well. Talking about gold, we have a long signal here from my system in gold. So that should have been automatically traded as well. Let me quickly check that if we are long there at the moment on my mobile phone, because I get an automated entry. Yep. Long here in gold at a little bit of slippage on this one, 4,471. And Yeah, I mean, that goes hand in hand with what we're seeing right now in the indices. So NASDAQ going down, actually gold going up there. Another thing I want to integrate in my trading also in an automated way is this trading system here with cells and where it tries to pick on certain criteria of confluence buy and sell signals on a Renko chart for euro dollar, but that's still a work in progress. Let's quickly see before I continue. No questions. Leave us a like, by the way, guys, and smash that subscribe button. On how many subscribers do we have now? 93,600. So our plan is, of course, early next year to get to 100,000 subscribers, and you can help us with this by pressing the like button, by leaving a comment here, and by, of course, subscribing to this. So Jonatan can get this beautiful, I think it's a silver YouTube plaque in the background for his trading dungeon, so to say. I think he's sitting in the basement where he has his office. Good, let's continue. Just wanted to talk about something. Yeah, one thing I want to look at together with you is something I've been working on over the Christmas days, which is, I call this, or maybe let me begin like this. My background is an options trader, so I earn my money by selling, by writing forex options. And so that's a whole different story. Doesn't really have anything to do with what we are doing trading wise here, usually at the scalpers. That's why at the fivers. That's why I don't talk usually about this. But I've been asking myself for quite some time now, can like this whole data we have about option expiry actually be translated maybe into trading signals? So I sat down and thought for quite some time about how this could be the case, and I think I found something, built like a trading system out of this, which I want to start trading live on a Fivers account starting on the 1st of January or 2nd of January, maybe, or maybe I should do it on the 5th of January when liquidity is a big back into the market. And what this does is it fetches, so to say, option expiries for a currency pair, in this case, euro dollar. So you see here on the expiry date on the 29th of December, where do we have puts and calls expiring? At what strikes? Where's the so-called empirical max pain? That means at this max pain, which today is at around 116.50, this is where most of the people that bought these options would lose the largest amount of money. And the theory now is that this area of max pain is until the cutoff of these options, which is at 10 a.m. New York, so in roughly 5 hours from now, that it kind of has a magnetic effect to this price. And I did a lot of research over the last weeks on this, tried some stuff, and found what I think is like in a trading system or a truth, an underlying truth about this magnetic effect that can actually be translated into a trading system. And I'm tracking now these trades. As I said, the system is live already, or the tracking is live. I'm not going to trade it should we get signals from this today, but it will track trades based on these option expiries in euro dollar, dollar yen, dollar cat, Aussie dollar, dollar Swissy, and Kiwi dollar. And you can see the back-tested win rate, not optimized win rate. So that is really this ready-made system without being optimized and fitted to the data, how much win rate had this system in the past. You can see this is in worst case, which is in this data, Kiwi dollar, 73%, in best case, 86%, which is amazing. No, this is a very high win rate. Doesn't tell us, of course, yet are we earning money with this? Because if the losing trades are much, much higher than the trades that were our winners, we can still lose money with this. However, this is taken care also. And what the system will do now in an automated way is it will look at 6 a.m. New York time. So that is 12 p.m. Is that? Yeah, 12 p.m. Central European time. Are there any signals from this? and then it will hold a spot position. So we'll, for example, go long or short on the fibers for euro dollar and hold this position until the New York cutoff for the options, which is at 10 a.m. So for 4 hours, and all in an automated way. And my goal now, of course, is to see how is this system going to perform as good in a real setting on a fibers evaluation account. I'm going to use a high stakes account for this, by the way. Or is this like half as good, which still would be awesome because we're talking about Sharpe ratios well above 2 here. Or is this like one of those systems maybe that looks good on paper, looks good in the backtest, but in reality just cannot perform? And I want to do that in a very transparent way because I think it kind of showcases really good how you can go about in developing systems like this. This is why I designed this dashboard there. And by the way, don't bother going to the web address of this one. It's not open to the public yet. Maybe I'll do that at a later point. So you cannot register for it yet and cannot log in. And so my plan going forward then is every Monday when I'm streaming with you, maybe I'm going to stream also 2 times a week starting next year, that I will share with you like the trades that were executed by the system over the last week. Were they successful? Were they not successful? How did they translate into the prop trading account at the fibers? Are we able with a trading system like this to pass evaluation stages and get a funded account, and optimally, of course, then also grow this funded account or automatically execute it without me interfering in any way manually, except, of course, if there are bugs and stuff like this in the future. And yeah, Semcha says something very important. TradingView has a new feature which shows the option chain for each asset class. That is very true. However, with a bit of a drawdown, and the drawdown is usually for forex options. This, whoops, no, I don't want to do that. I wanted to. Why can't I press on this? So you have options here. Very true. However, these options you are not getting for forex pairs, first of all, at least not to my knowledge. Correct me if I'm wrong. And the big problem of the forex option market is that 85% of trading in options is done OTC, so directly. So when I, for example, for my private portfolio trade options, I'm not doing this over an exchange. I'm doing this directly with a bank, one-to-one. So for example, I'm going to call Bank UBS or Julius Baer or Saxo Bank and ask them hey guys, I want to write this and this option. What is your price for this? And whoever has the best price in relationship to the margin I need for this option gets the price. Then this makes 85% of the market. So I need to rely on, since I cannot get my hands on this data because the banks keep that data usually private, or they'll charge you an insanely high amount of money in order to access this. I need to pass publicly available data, which is DDTC. And yeah, as Samsha says, of course, there are also FX options under the CME data. That is correctly. However, CME only has option expiries on Fridays. So you don't have daily expiries. And for this trading strategy, I want daily expiries. So part of the preparation for the system was like passing publicly available data to see how many options at which strikes and at which notional value expire. You can integrate, of course, CME data into this. However, it's only going to give you data for I think every second Friday per month or something like this, because they have fixed expiries on CME for the Forex options. So yeah, if you are interested in seeing how does this whole thing develop, how do I go by, trading a system like this live, how does the system perform, and so on and so forth. Be my guest. Starting probably 5th of January, I'm sure 2nd of January is still going to be pretty low in terms of volatility. I will go live with a system and share it with you publicly. So yeah, maybe that's something, that helps getting you inspired how to do things, or if it fails, how to not do things. That is, of course, a possibility of an outcome like this as well. But this is also the reason, in my opinion, why it's so important to really jump onto a great offer like we were showing you before. $2,500 high stakes account for only $12, because you can, on a very slim budget, exactly test things like this. You maybe found a great trading strategy. Maybe you're a discretionary trader. You have your own system that cannot be automated, which is okay. Then you can test it in there. Maybe you are a trader that automates everything, like I am doing, but at least on lower time frames nowadays. And then this is something like a sanity check to see, is my strategy really working in reality? And you can quickly see that probably after 3, 4, 5, 6 months, when you have a lot of data. Or, am I just making things up and like wasting my time? At least in this case, the pain that is just $12 in terms of cash that it cost me. Of course, not counting and factoring in the development of a strategy like this. And I can see somebody not in the background anymore. Welcome, Jonatan, and Merry
Thank you, Dirk. Thank you.
Christmas to you as well.
Yes, Merry Christmas, Dirk, and Merry Christmas, everyone. Well, belated, I guess, and Happy New Year. Hope you had a. I haven't been in the office for almost a week, so it's almost like I forgot how to do this. So, if there's any issues with the sound or the video, please let me know, guys. Hope you're all having a wonderful holiday season. Good to see you, Dirk, and good to see everyone
Likewise.
in here today.
So you have been relaxing, really. I mean, this is what you should do over the holidays. Contrary to me, who has been relaxing over the day, and once my family was in the bed, I sat down and started coding.
Yeah, usually that's what I do. We talked about this a lot in the live stream, and like a good weekend for me is just me and the charts, or me, the charts, and maybe Claude and ChatGPT working on some indicators and some trading strategies, and going through the journal and really going into the what happens in the back end of being a trader. And it's not just about taking the trades, it's about journaling the trades, and looking at
Yeah.
what could I have done differently, and things like that. But for the last 6 or 7 days, I haven't opened up TradingView. I haven't been in the office. I haven't touched the laptop, and I think it's really, really good to have that disconnect sometimes as well, especially when you're working, the way we're working here. It's we're both traders or entrepreneurs as well. A lot of things going on. It's difficult to wind down sometimes.
Yeah, it's difficult to wind down, but I think that's okay. First of all, of course, you need to force yourself to wind down. I like, if you would have talked, I mean, we know each other for a while already. Like the Dirk, like 2.5 years ago, was very different, because I didn't sleep very much back then, because I was
Yeah.
working all the time. Nowadays, this is like one thing I started actually in early 2025, like one of the things I wanted to change for 2025. And one of the few things that really I was very disciplined was that I told myself I need to make sure that I sleep at least 6 to 7 hours every night. And I did this for most of a year, and it really changed a lot. I have much more energy when I start the day. Otherwise, when I only slept, I used to sleep like 3 or 4 hours before that at night, and when I needed like a liter of coffee to be able to think straight. And this has, for most of the days, not all of them, of course, been very, very different. So right now, my next year's resolution will then be that I finally do something about my health more. I told you I think about this as well. So I got a treadmill that I can put underneath my table. I have a standing desk that I can put to a standing level as well, so I can make sure that like every day for maybe an hour I can be on there and at least walk a bit while I'm working.
Yeah,
so
that's
I hope
nice.
this is going to have a little bit of a positive effect on my on my health. There are, of course, millions of other things, but I'm not going to fall for the trap again of trying to change everything at the same time.
Exactly.
That is
Very
never going to.
important.
That's too much out of my comfort zone. I don't know if you were sneak peeking a little bit already, because I have a resolution trading wise as well for next year.
No, I haven't looked much. If I'm going to be honest, for the first 30 minutes here, I just got back, and I feel like this. There's so much things. What I did in the first like 15 minutes of working today was just looking at the screen and all the things I had to do, and just staring at it while drinking my coffee, not doing anything. Like all of this.
I know what you mean. So I've been
Yeah.
sharing this already, or sneak peeking this a little bit with the audience. I want to start probably January 5th, because January 2nd is probably, it's a Friday. It's probably going to be low volatility, not much liquidity in the market. I want to start a brand new automated strategy on a brand new evaluation account, probably high stakes account, and which is based on something that I've been working a while again, because I wanted to translate everything that I do with FX option trading into FX spot positions. So I built over the course of the last weeks like a platform which lets me analyze every day where are option expiries, where's the so-called max pain. Max pain means this is like the level. For example, in euro dollar, that would be 116.53 today at New York cut, 10 a.m. New York cut. So that would be at 4 p.m. Central European time, where the people who bought these options lose the most money. And in theory, you can see that price likes, on some days at least, to gravitate towards this max pain. It's probably not going to be the case today because it's too far away. It's a low liquidity environment and so on and so forth. In the background, when there's is a system analyzing these patterns and deciding 4 hours every weekday before the cutoff if it should engage in a long or short trade on the supported currencies, which are these ones right now. 2 more to be added later this day. And the platform is going to track these trades. These trades are, once the signal fires, also, of course, then translated into trades on a Fivers evaluation account. And I want to share this like every Monday to kind of see, first of all, how can you go by in an automated way to track if your trading strategy really is successful. Second of it, because the backtest results on are insane. These are not optimized backtest results. These are validated in a walk forward fashion. So on data that they've never seen. And I still have a success rate there of 68%, for example, in euro dollar for holding a position 4 hours, a couple of days every month, to see like, can this actually hold up in a realistic environment? Or is there a difference between back-tested results, no matter how valid your statistical method is on that, and reality then? Because you never can factor in everything. You know that as well as me. And so every Monday, we're going to look at this. We're going to see where there trades. If the trades were there, were they successful, were they not successful? Are we able to, after time X, to pass in an evaluation phase with a strategy like this and move into a funding phase? I think that's a very great experience. I'm very excited about this because I've never done something like this to kind of share this really publicly. Normally I do this, of course, behind closed doors, and I kind of hope that that this is not going to be a straight experience, that we smash like into funding right away or something like this, but that there will be like stones in the way and sinkholes that maybe we fall into, to kind of learn, like to see like, hey, these are the obstacles on the way of trying to automate a strategy.
Yeah, I think that's a wonderful journey for the. Is this your website?
This is my website, yeah, but
Nice.
you can navigate to it, but you cannot log into it.
Right, that's awesome. I love having it online and tracking it like this. Looks really, really cool. I like that. Very
So we'll
nice.
see. I only need to connect this now to from this platform or the Python backend to TradingView with a bridge, and not to TradingView, to MetaTrader. And then we'll see. And I think this fits also quite well into what you and I have been brainstorming a bit about, like getting more AI and LMMs and stuff like this also included in what we talk about, rather than just talking about charts. Of course, that's will always be the largest part of it, but to get other stuff, because there are many ways to Rome, as people like to say always. Good. Now I've been talking a lot. Are you in a trade currently or anything?
I am. I'm currently looking through my journal. Because there's been this month I took a lot of trades with very long holding times, because I wanted to calculate live what my. Just wait a minute, I get a look at this.
Maybe while you're looking, let me quickly answer this question. Hi, Dirk, what is the point of selling a put option above the current price? For example, Oracle puts at 220 available to sell, but current price is at 195. How does selling a 220 put in this case work? Well, first of all, it has a lot of intrinsic value. So the option has a minimum value already of $25. The put strike 220 minus the current price 195, so 25 plus what the fair value then according to probably the Black and Scholes model is. So in order implied value, implied volatility. Sorry. And so you probably somewhere, I don't know, I have to take a guess, like at 40 or 50 euro or something, dollars per option, because Oracle has been very volatile. So it should have a high implied volatility. The point is, first of all, probably people are buying more than selling these options on retail side, at least. However, you have market makers selling this option. And what they think, of course, is that Oracle is going to drop further in price until the expiry, so that they can pocket those 25 plus implied volatility fair value, so maybe those $45 or $50 per options. It's as simple as this. If Oracle then goes above 220, or actually their break-even point would be at $245 if you just count the intrinsic value, and then they'll hedge the position.
Right. I'm gonna go ahead and share my screen here, if that's okay.
No.
So you guys know I've been in this gold trade for quite some time, and then it finally hit the TP here the day before Christmas, or at least where I guess it's different where you are, but on the 23rd of December, we finally hit that TP for this gold trade. So I was holding this for. I entered on the 24th of November, and then I hit TP on the 23rd of December. So almost exactly one month for holding this gold trade right here, and that's great. I mean, this is a 2.3 R trade. But we have the swaps. We have to take into consideration the swaps. I mean, holding for a full month is a long time. So now in December, because a lot of people have been asking me, like, how can you hold the trade for that long and still make money with the swaps? So what I've done is I've entered a few positions here in December. I actually have, let's see, I've got let's see, I'm going to just change. All right, so I'm going to do the entry. The entry date needs to be, just give me a second here, because I'm going through my journal and I've looked at all of December, but it's only taking. Okay, never mind. I've entered gold. I entered the trade on Euro USD as well, but that one was entered in the beginning of November and then closed on the 1st of December. So I count that as a November trade. So in December, I've taken 1, 2, 3, 4, 5 trades. 1, 2, 3, 4, 5. Yeah, so it's going to be 1. That's 2. And then we have Euro NCD. This one as well, I entered a long trade on Euro NCD here. I can't remember, or was it a short? It was a long here, so that was one. That one was a loss. This one, AU density, I'm still in. Also a long hold. The swaps on this one has been very, very expensive. The last swap was very expensive, maybe because of the holiday season. I don't know if the swap changes during that time, but the last swap was very expensive. So, I mean, in trading, it's all about doing this and then looking at the numbers and because when you're, and this is one of a very good example of why forward testing and live trading is so important when testing your system, because none of this would have been possible to see in like replay mode. So let's say that you're doing replay mode back testing for a swing strategy and you're trading based on a daily. It's very easy to just enter a trade like this and let's say, oh, in 3 months it's going to be up here, and then you're like, oh, that's a 5R winner. But if it takes 3 months to get to 5R, maybe you've already paid 75% of the profit in swaps. So you're only making maybe 2R, something like that. So currently, I have paid, I'm only up around, on this one, I'm only up in actual profit $88. So so I'm up $200, but with the swap, $88.
Oh,
So I've
that's
paid
crazy.
over $100 on swap on this one right here. So $200 profit. So I would have been up I mean, I'm still up on the account. Things looking good, but I paid more swaps on this than I would have wanted. If I go to, let's see, if I go to the gold trade. So this is the gold trade right here, and I'm gonna see if I can. Now the fees for this one is $25, and I made 350. So that's okay. I've only paid $25 in fee for this gold for 1 month, which it sounds quite low, right? It feels like it should have been higher, but it was
your
only
position
a.
size on it?
Sorry,
What was your position size on it?
only 0.01.
And then $25, quite a lot, no?
Is it? But it's a 1 month hold.
Let's see. What are we here? So
I can actually go into gold and see what the.
So your position size was, what is that, around $450? Oh, cannot be, no? I don't know how.
Yeah.
Yeah. If you then you paid like quite a lot, no? In term, if you paid $25 in fees, it's like 6% or 7% for 1 month. I mean, annualize that, then you are like at 70, 80, 90% annualized fees.
Yeah, well, I guess this you're not going to be able to hold a gold position for months trading with these.
Which, by the way, this is not the fault of the fibers. By the way,
No. I mean,
and this is normal. This is also, by the way, the reason why I look very much forward to when the fibers are offering futures trading as well. Because it's not that you, of course, don't pay interest rates, fees, and so on. But I don't like the detail. I don't know the details of the platform yet. But in theory, you could be able to select something like, well, I want to probably hold on a little bit longer to this position, so I'm not trading the future contract that is expiring in 3 days. I'm going to trade the future contract that is expiring in January, and then all the swaps are already compounded in the price I get there. So I think it becomes easier to, I'm not necessarily saying it becomes cheaper, but it becomes easier to compare really what is the net profit of my, or what can I expect in terms of net profit from my position.
Another one I had this euro NZD trade right here. Now the fees on that one. Now this is swaps with commissions. That's $15. I paid on that one, and I made well, actually that was a loss. That was only a hold for a couple of days. But let's take a look at the euro GBP. Here I lost $200, but then so gross loss was $200, but the net profit and loss was $248. So around $40 are paid in fees on Euro GBP, and that's also quite a lot. That's 25% extra loss on that trade. And then we had CAD CHF. This is just a very small fee on that one, but I held that one for 10 days. So it's only here I was paid $1.6 on CAD CHF in swaps. So it's a very small amount. So looking at the overall, I'm going to look at the equity curve and show you guys what it would look like without the fees. And it's going to be very interesting after I've closed this AUD NZD trade. And today I have to make a decision on AUD NZD, and I think the decision is actually going to be to hold this because it looks very strong. So I'm just going to be moving up my stop loss, and I'm going to be doing so a little bit more aggressively, because if AUD NZD starts moving sideways for a couple of days, then I will actually lose money on this trade that originally were a very good idea and I should have made money, but because I'm holding it for so long, I'm going to lose money on this one right here. So I'm going to look at what the value would look like without the fees. Just going to see if it's that's even possible. I can show you guys in I can share Edgewonk directly here instead, so you guys can see my journal. So these are the kind of things that I do on when at the end of the year. I kind of stop trading at the end of the year, and then I just go through my journal and I go through all my trades, and I go through my personal journal, where I write like a physical journal. I go through that one and I make notes, and I try to kind of make it, and this can go on for maybe a week or so into the new year. But for me, it's very important. I made a lot of I got a lot of insights last year into my trading, which resulted in, so last year I did the same thing, and it resulted in me taking a very long break from trading. And this time when I'm doing the review, I feel like I don't have the same level of stress that I had last year, which is great. So it's been a massive improvement. So now the focus will be on looking at the statistics from the trading and making a plan going into next year. And that plan needs to be based on how can I optimize my, like I have a trading strategy and I have a trading approach which fits very well with my personality. Now I just need to find the right market. And it might actually be the case that I will have to go over the futures because of the reasons you mentioned, the commissions and the swaps and everything. I might have to go into futures to make that viable with my strategy, or look at other markets and assets to trade, or trade in a slightly different way. But I'm trying to understand here how to, because I have an option here of display value without fees, and I'm trying to, so if I look at account balance, that's not possible. Okay, so I think it's return. Okay, so this is the value without fees. So the orange line right here is the value without fees. So down here is where we currently are. Return for the month is minus 445, which is about 0.5%, a little bit more than 0.5%. And the return without fees would be 356. So it would be $100 more without the fees. And if I'm going to close AUD NCD right now, I would have made $200 more without the fees. So I would say that in this case, especially AUD NCD, the swaps on that one is significantly changing the trading results. Because if we close AUD NCD right here, the return would be let's say around the 550, but the return without fees would be stay the same at 350. So that's a big difference. It's almost, it's like 50% less profit.
Yeah, and all because of the gold trade. Yeah.
No, it's mostly because of the AUD NCD
Oh,
trade that
yeah.
I'm currently in right now, because that one I have $100 paid in fees, and I'm wondering why that is the case. If it's because if it's perhaps because of the swaps that happened over, does it matter like if it's the holiday seasons
Yeah,
with
of
the
course.
swaps?
I mean, settlement dates. No, it's like you normally have every week anyway. With that on Wednesday you already pay swaps for the weekend as well, because your trade is settled on Monday. And of course, if you have like Christmas, and especially every country has different holidays. Like it might be that Australia has 2 holidays, and New Zealand has like 3 days of holidays, but only one of them overlap, for example. So you end up settlement with something like T plus 6 or 7, and that can be, and of course that gets very expensive, especially if you have a trading pair where you have a high swap, but it's not that high actually for Aussie Kiwi. No, let me see quickly what we have in terms of interest rate in New Zealand is 2.25 at the moment. And what does Australia is higher, no? I think.
So I'm looking at swaps for being long is minus 16, and swaps for short is minus 0.8.
It's not
So
that high. Like Australia is 3.6, New Zealand 2.25. It's not like so insanely high, but it always depends, of course, on what the broker then really makes out of it, and like the liquidity providers behind that. If liquidity is tight, it can also be that they widen swaps, for example.
yeah,
Mm.
that might be the case. It's a little bit problematic. It's a very high swaps. I have to look into the details of that, because I don't feel like it's 1,000. I mean, $100 in swaps. Um, that's a lot.
For how long? How long did you hold on to that position?
It's a big. Well, I think it's like the 5th of December, something like that.
So about like, let's say like 30 days, no, not quite 25 days. Yeah. Yeah, what can be if the swap against you is quite high already, then 25 days. That's like 8% of a year already, or 7%.
Yeah. So this kind of gets me thinking. I have to look at. I would then, before entering, because what I've done now in December, I've basically, and this is on the on the prop accounts. It's not my own money, and therefore I can make this experiment, or do this experiment. So basically, what I've done is I've decided to, okay, I'm only gonna trade price action. I'm gonna hold these positions just based on market structure and just based on price action, and just ignore the swaps and ignore the commissions, and actually see, is it a viable option to do? Is it something that you can actually do in real life, in real trading? And I'm starting to see now that, okay, so if it weren't for AUD and CD, it's acceptable, even though it's high. Because imagine if the next trade I have is a big winner, then it kind of works, because the difference here is $100.
Yeah.
So, and then if I have a big winner, it kind of, it kind of works. But with AD and CD, it's gonna make it much difficult to. I would need to increase my win rates significantly to actually make that worth my time in that position. So what I would have to do is, before entering a trade, I would have to make sure that the swaps are not too high on the position I'm taking.
Yeah, this is what you should do. But I gravitate when it comes to trading on FX broker accounts. I'm gravitating also towards leaning into more day trading strategies, like the one I just shared. This is a strategy where the max or where the time the position is held is 4 hours. So if you're very unlucky, maybe you pay like a 3-day swap if it's like doing cutoff on a Wednesday or something like this. But usually you should end actually up without paying swap. But changing then to futures, for example, for index trading or something like gold trading can, of course, make sense. But there are other obstacles as well. I experienced that last night, for example, in Bitcoin, where I trade the perpetual futures, automated way. Very good strategy. Not in December. December was a horrible crypto trading month for me. But nonetheless, there was a trade executed, a long trade. And first of all, I had a slippage of $100.
Yep.
And my trade gets executed with under 100 milliseconds from alert to execution. And then I have a stop loss mechanism, which was triggered also immediately because the order book suddenly was widening. And this is something you just cannot account for on reasonable backtesting. You can account for that, but then you need all the tick data. You need like a super powerful high-end machine and weeks of time to really test everything. But this can be very frustrating. And, as somebody who has done this for a long time, of course, you kind of think, okay, sometimes this can happen. You're unlucky. We had a lot of momentum suddenly going up in Bitcoin again, or in crypto in general. Market makers are not fast enough, so they widen the order book. It's natural that happens. But when that happens and you are not aware of something like this can happen, it's going to frustrate you. These are exactly the scenarios where then usually beginner traders will start blaming the broker. They ripped me off, my stop loss order was executed, but the price was not even there. Yeah, it was executed because the order book widened, and maybe there was one tick at or below your stop loss where I don't know, $200 worth of Bitcoin found a price, and then you execute it. It's bad luck, but this also speaks. This is why I like that you use a tool like Edgewonk. This is why it's so important to keep track of your trades, because otherwise, every time something like this happens, you'll be like concentrating too much on the negativity and lose the sight on that long term over 1,000 trades. Maybe your trading strategy is profitable.
Exactly. It's very, very important. And just like Henry says right here, you might have to remove some pairs from your trading list because of high swaps, and that would also shorten your market scanning. This is, of course, also a good approach. And here I'm assuming that staying with the like just removing the exotic pairs, obviously, and just staying with the majors and all the crosses between them, and maybe add a few of the miners with decent swaps.
Aussie
But
kiwi is not exotic, though, no? I mean,
no, not at all, not at all. So like that. That's probably one of those I would keep on the list. So I'll probably have to. What I'm gonna do is I'm gonna compare, because I'm also trading on my live account on IC markets, and I'm not seeing the same swaps on IC markets, not even close. So I'm going to compare it to some other brokers and liquidity providers as well, to see if they have, and then see if there's maybe an issue here with the liquidity provider, because it seems like it's. I mean, I'm okay with paying $25 on gold, holding that for a month. I mean, I don't think that's super expensive, but paying $100, that's like, wow, that's big. That's for a fairly
big,
small.
but of course we still cannot, lose or forget that that money is not printed out of thin air. So for every real transaction that is taking place there, especially when traded with leverage, there is in the background money borrowing going on. This is why interest is generated either for you or you have to pay interest. So it's not usually not like some greedy entity, that is trying to siphon money off you. But nonetheless, of course, totally makes sense that you kind of compare, okay, what are the swap rates at other brokers? Because mistakes can also happen. Maybe somebody had a fat finger while entering the swap there, or however the mechanisms are there. So totally valid.
The Fibers have launched a broker. It's called TSG, Trade Set Go. So the Fibers as a group, we have the Fibers prop firm trading, and then we have Trader Pool. It's a sister company of the Fibers, and then we have a broker as well called TSG. So we have already launched it, and go check it out. It's really cool. We can combine trading with the personal account and the Fibers. Trade with the Fibers prop firm, get the payouts into your personal broker, and then you compound that personal broker. Really cool way of trading. So definitely check that out. And if you have gotten an email, then you're ready to go to start trading on that broker. The liquidity provider will not change as not as far as I know. We're not going to change anything for the current current setup. Does the broker have? I would assume that it has leverage. I actually have. Yes, I guess. It surely has leverage. Not sure what level, but go and check it out. Trade Set Go. I can just see if we can find a URL for that one and put it into the comment here. Okay, so this is like I think I need to make some major changes in the way I'm trading. So for these past, I think it's been 6 months. For about 6 months, I've traded by only looking at the daily, and it has been a very maybe not very rewarding in terms of, well, I've scaled the account and I've made some progress, but it's not like it's been massively successful in terms of monetary gains, but it's been very successful for two other reasons. The first one is there's just I have a completely new sense of being in the flow, like it's being in a state of mind where profitability and proper trading processes are born. And that's because moving slowly, looking at the high time frames, and taking few decisions fits very well with my personality. So that's the two things that has really been eye-opening to me. This is something that we all know. We all know about it. I've been trading for 10 years now. Of course, I know all about this, but we all over time we change as humans, and the system kind of has to change with us, and I found now that I've gone through another threshold in my trading, so to say, and I feel like for the last 6 months I haven't felt a single minute of stress in my trading, which is completely new to me. Because last year, from the day that I started trading until maybe a year ago, every day was stressful. Like every single day was thinking about trading and being stressful about trading. And these last 6 months, it's been just no stress whatsoever. So I know that I'm on the right track here to find my long-term, or at least for the next few months, my approach to the market where I want to be. But then I now have to. So basically, I've solved one piece of puzzle, and that is like, what should I do in terms of time horizons and timeframes and type of system. But then the next step is, how do I optimize this? And that's when we look at things like the swaps and the commissions. Are the swaps too high to not make the system profitable? Because imagine if I have a 50% win rate and an average risk to reward of 1.5. On paper, I'm profitable. I would have very, very slowly have an upwards trending equity curve. Very slowly, but it would go up, and that's all I care about. But if you add high swaps and commissions, it will no longer be profitable. So I will have to optimize that, because if I have fairly high commissions and swaps, that 1.5 average risk reward might go down to 1 or 0.95, which means over the long term, I will not be profitable. So that's what I have to do now. How can I optimize this? And I fear that, just like you talked about, Dirk, on a forex broker with high leverage, you might have to, like, the money, we all know this, the money is in intraday trading. We all know that. So, or at least intra-week, not monthly, like it, because it can get very expensive with the wrong pairs and everything. So if the first step in this process is, how can I optimize the current trading style to lower the commissions and the swaps? The commissions is not going to be a problem because I enter a trade like 4 times a month. So the commissions, it's not a problem. But the swaps become a big problem when you're holding for a few weeks. And if I can't optimize that, I have only one option. I guess 2 options: go to futures, but I don't really want to do that until the very last stage. What I can do, and maybe what I should do, is stay with what I have currently on the daily, and then when I find something of interest, go back into the 4-hour, because it has always been the 4-hour where I felt where it has worked best with for me. If I want to be a little bit more active, it's the 4-hour, never lower than 4-hour. So that's kind of like what I'm looking at right now. First, optimize the statistics in terms of swaps, and if I can't do that, see how I can integrate the 4-hour into the system. And I do have I do have the the indicator that I've coded many years ago that might actually work for this. So I'm gonna look into optimizing that indicator to help me find the trades on the 4-hour, and then look at holding the trades no more than a week, I believe.
Yeah, but I mean, every asset class and every asset within the asset class always has its own challenges. In my opinion, like if you look at euro dollar, for example, and if you back test systems there, not talking about like swing trading systems now where we want to hold a position like a month or 2 or 3. Of course, then you need to factor in things like swaps. For sure. But on euro dollar, for example, you probably in 98% of the time, you're not going to have an issue with much slippage. And commissions also are very low on the 5S anyway, with $4 per round turn. So backtesting results tend to be pretty reliable with a lower error margin than on other pairs. However, on the flip side, then you have with euro dollar probably the asset that's the most effective in the whole world. It's the most liquid. We have most traders out there who touch forex are for sure trading euro dollar. You have all the institutions. You have most of the world's trade being done in either euro or US dollar. So it's insanely effective, and I've seen that over and over again when backtesting systems on data like 10 or even 20 years down to the minute to a very granular level, that there is for 99% of the systems that are tested no edge to find, because everybody's doing that and it's effective, and there's always somebody, at least one entity in the world that does things much better than you can do with your home setup. Then you have like asset classes like crypto, where like let's take like something like Ripple, for example, XRP, which has a lot of edge for a lot of trading strategy, but you pay for that with sometimes very bad execution. I had this example right now for Bitcoin this morning. For Ripple, I can give you 10 other examples where my alert price, where I want to enter the market, was like very different from the price I got executed for. So I have a large slippage there. I need to take this into account when I backtest the system. For Bitcoin, for example, I backtest my trading system always with at least $50 slippage on signal entry. So a $50 per Bitcoin worse price, and the same on exit. So I have like a margin error of $100. But like this morning, like you saw, even that sometimes cannot be enough, because then suddenly you have a slippage on entry of $100 or $150. Plus you have much higher fees in crypto. Very often, if you work with market orders, you'll end up paying like a round turn commission of 0.1 or 0.12 or 0.15% if you are not like a heavy trader that trades like hundreds of millions of dollars already every month, and you get to enjoy very low fee brackets. So that's the challenge there. The edge very often gets eaten up by slippage and trading fees. And these are exactly the things you need to think about. I'm not saying before using your trading strategy, but you need to factor them in when backtesting your trading strategy. Like on a paper, probably half of the people here within like 10 minutes on TradingView, they could click together a nice trading strategy that earns money. If you don't factor in slippage, if you don't factor in spread, if you don't factor in trading fees. And especially, and this is the challenge when we talk about scalping, because slippage and fees have a much higher effect there than on swing trading. On your swing trade, the gold or the Aussie Kiwi, like the spread of 1 or 2 pips plus the fee, it's neglectable. It doesn't matter.
I'm gonna probably have difficult time pronouncing that as well.
Yeah,
we all know what
the
you mean.
beautiful phonetic language of English, second to French. And anyway, it doesn't really play a role in your probability in that case. However, then swaps again, and there's always a trade-off that you need to factor in. And I believe many people don't do that when they design trading systems, when they see like, wow, this indicator, great, that gives me such great signals, and on paper it all looks good, but you need to backtest it. You need to, and if you, with taken into account swaps, with taken into account fees, with taken into account spread, then you're, and do it 2 times worse than it is in reality. And if it's still profitable, then you have a chance that it is going to be profitable in reality as well. But then again, I would also like live test the strategy on a demo account, or maybe not in a demo account, on a Fiverr's evaluation account, because it's more realistic than most demo accounts, for like 2, 3, 4, 5 months to see, does it really have an edge, or is there something that you maybe didn't take into account? And there are so many things that you don't even think about. It's crazy. I'm always surprised, even after all this time, like the things that I sometimes do not see when developing or even backtesting a strategy.
Yeah, definitely. You have to be taking all of those things into consideration, and it's a lot of testing. I think a lot of you'll get a lot of that information through testing. So
I'm parallel to this, like integrating Euro versus British pound into this option strategy that I was talking about earlier. And this one has in the backtest a Sharpe ratio of 3.04. Well,
wow.
That is like too high already. I can guarantee you already there's a very, very high chance that there's something I didn't see when developing this. But it will show beginning of January in the live trading then.
I'm going to see if I can find we have questions about the
thank you, Henry. Also, I'm going to give up.
Neglectable.
Yeah. Too bad we don't have LJ with us today. One of our other native English speakers.
I can't find the URL for the broker right now. I'll see if I can find that a little bit later. So yeah, I think what I have to do is I need to now look at, okay, so the process that I've built up over the last 6 months is a very good understanding of the higher time frames, because I've always felt like there's something. I've always been drawn to the higher time frames, because I want to know the what are basically the primary trend, and that's the dominant trend. That's the trend that is visible on the higher time frames. It's like when you zoom out to the weekly, you look at the obvious trade, the trend is the market going up or down, and that's kind of like the primary trend. And then I always want to try to position myself to trade with that trend, and that's something I've become very good at on the higher time frames. But so if you ask me, for example, do you think GBP NCD is going to be higher or lower in the next 7 days? I'm fairly confident that I can say, well, I think it's going to be this one is difficult, but I can safely say that I think it's going to be higher, because then I know that the probabilities are in my favor. If you look at the statistics, then yeah, okay, so uptrend should be higher. And then if I take that bet every time when I see a clear primary uptrend, I should be net profit on that. But that's just in theory. And then in practice, you have the swaps and you have the commissions and everything. So what I need to do now is so I have this knowledge and I have this experience on of the higher timeframes on the daily. How can I capitalize on that skill by riding that intra week move, only have the positions open for a few days? And it's difficult because I'm not really sure I want to do that, because if you look at gold, for example, to me, this was the trade that I wanted to take. This was the move that I wanted to be in, and it worked out, and it worked out almost perfectly. And this is what I want to be trading. If I go down into the 4 hour, I just don't see this in the same way. I could have, of course, entered around here and then closed it when it started ranging here or something like that, but it's not really what I want to do. So if I can solve the problems with swaps, then I think that would be the best option for me.
Yeah, I think futures are going to be the way for you there. Not saying, of course, that you don't pay interest there, but at least you have a clear understanding what the interest is, and you're also receiving the interest amount. If you're on the other side of a trade, which is not evenly distributed, in my opinion, at least for a lot of forex players. Even those that should have a positive swap for you, you end up paying the swap because a lot of forex brokers want to make money on this without really, if you want to say it in a bad way. And again, I'm not saying the Fivers does this, like without the client noticing, so to say. Because swaps are not that easy to understand if you're a beginner trader.
Yeah.
One cool comment here from Black Fox 87. I can just underwrite this comment as it is. Stress for me means that I'm not confident about my strategy and my risk and trade management. 100% on your side. I absolutely feel the same. And I saw that. I saw myself slowly developing out of that. Like last year, if you would have asked me at this time, I actually was. Because the scalping on forex and so on is also still kind of new to me, because I come from long-term fundamental investing and trading or swing trading, and I was very frustrated in the beginning that like my approach that I have for my option trading, which is a contrarian approach. Why I'm going to explain that in a minute, and did not translate well or translate at all to scalping strategies. I had to learn really that the trend is your friend when it comes to lower time frame trading, and that by trying to go against the trend, you are very often prone to burning your fingers. I've tried to offset this with a lot of strategies like scaling into trades, but still I always ended up like that my average loser was much, much higher than my average winner. So I always needed this very high success rate, which was very stressful for me, especially since I'm somebody that is quite impatient, at least on the lower time frame, and I tend to premature close my trades. So it gave me really a lot of anxiety, a lot of stress, like sometimes sleepless nights, because it was very hard for me to accept that I'm so successful when it comes to long-term trading and investment, and that I cannot translate this into short-term trading, into scalping or intraday trading. That was really, really frustrating for me until I accepted that I need a fundamentally new approach, not only to my trading system. So I gradually changed that into a trend following trading system, at least for most of the systems. But I also had to accept that I have to turn off my ego. And for me, the only real way of turning off my ego, as it turns out, on lower time frames, is to automate things, to take myself out of the equation, to have like things automatically being executed with proper risk management, with proper entry and exit, of course, that is, without me constantly looking at the charts and making dumb decisions because I think like, oh, I need to get out of this trade, when in reality that long trade had just a short pullback and then really started rocketing off in my direction. And ever since I started doing this, I experienced what Jonatan just said, like being much more relaxed, up to the point where, like, for some systems, I look at them once a week just to see how have they performed. And I can keep my distance, at least my emotional distance, a lot more to short-term trading, to scalping, to day trading than I was able before. And this is coming from somebody who has been on the financial markets for 26 years, which shows, you never stop learning, and there are always things that push you out of your comfort zone. And interestingly, also always things that constantly change. And by the way, I think this, by change, I mean that constantly that trading systems that used to work very good suddenly stop working. And I think with the rise of AI, this is going, or this is actually already accelerating, that a trading system tends to lose its edge sooner than it did in the past. By the way, contrarian strategy, as an option trader, I'm somebody selling the option. So you also call that writing the option. And for that, you look for high volatility because then you get more for your option. High volatility, usually you have in markets that crash, for example. So in stock markets, high volatility would be a high VIX in this case, would be when you see a stock market crash. So when nobody else wants to buy, you are the one stepping in, so to say, through the option. And so you are more of a contrarian there. For me, really, really difficult. It was very difficult. I think now I've not nailed it, but I've become better at it to translate that into short-term trading.
That's also one of the reasons why I want to focus on the higher timeframes, is because of the rise of AI and algos. I think trading the lower timeframes is going to be increasingly more difficult because you're going to be everyone's in a few years, everyone's going to have their own algo and their own, like, because you're basically just going to be able to go online. It's like, code me an algo, and it's like, okay, here's an algo.
So I'm waiting for the bus that comes in 5 minutes.
Yeah, and exactly, and it's going to be increasingly difficult and very, very noisy on the lower time frames, more than what I believe it is today. I mean, sure, there's going to be an edge there, but I think the edge on the lower time frames will rely more on like mean reversion and statistics than actual price action, I believe, like support and resistance. But on the higher time frames, if you're able to identify that primary trend and able to ride that primary trend, you basically you remove yourself from the intraday noise. Everything that goes on within that daily candle, it doesn't really matter to you because you're only looking at the daily the close of the daily candle. And that's the philosophy I have in trading right now, that I want to ride the primary trend, and then the algos can fight with each other as much as they want on the lower time frames. That's not going to affect me on the long-term trajectory when we're talking about weeks and perhaps even months. So that's kind of like the philosophy I'm going with, and I'm hoping that I'm able to perhaps find find a solution to that in perhaps futures. Who knows? We'll see if that might change things.
We will see for sure. But the attractiveness of lower time frames for me is also on an intellectual level. Because I know there are so many people that are probably better than myself doing the same thing, but I want to be the best. I'm very competitive when it comes to that. And I cannot, or I can hardly accept that there are a lot of people out there who are successful with it. And then I'm going to ask myself, well, if they can do it, why can't I do it? What is the missing ingredient? I need to find this out.
Yeah, definitely. I'm all with you on that. I also feel like I have that competitive nature where I feel like I want to try and become the best I can be on the lower time frames, because I know that that's. But honestly, I feel like I have to adjust to my personality and adjust to. I mean, I tried it so many times before, and it always ends up with too much stress and too little time for other things. So I want to excel at the lower time frames, but I think I have to accept that maybe that's not what I should be doing.
Maybe that's exactly what you need to do. Not focus on the lower time frames anymore, and eventually you will come back. Once they are off your mind, you're concentrated on other things. You suddenly get like new ideas because you didn't try to force it.
Yeah, that's true. That's true. Okay, so guys, I'm gonna jump off. We have Richard and Will coming on in about 30 minutes, and then we have Victor for the afternoon session as well. I will be listening in the background, Dirk, and if you need me, just let me know.
Alrighty, glad to have you here, and yeah, see you tomorrow, probably. No.
Yep. See you tomorrow.
Bye.
Bye.
Alrighty, guys. So we are back in our little intimate. How many viewers do 123 to 1 here? And let me switch here quickly back to my charts. Gold, we can talk about that in a minute. I saw some great comments and questions, mainly comments here. As Jonatan still already said, once he knows the URL for the broker, he will share it. Of course, I'm very sure it's not a long time anymore until it's going to start. But knowing the fivers is that I believe, or from my experience, they are only going to release a new product if it's really ready to be released and not buggy anymore. What else? Comment here from Sandesh56. My strategy worked for the past 5 years. I forward tested from January. It is highly profitable. What is the probability that it will work in 2026? I don't know. I don't have enough data for that to answer that question. So what did you do here? You back tested it for the past 5 years, and then you forward tested it from January this year, so 2025 until now. Did you take into account swaps, fees, spreads, slippage, and all the things we were talking about? The thing is, like I said before, you only know if your strategy is in reality profitable if you push it into production. So if you really trade it in reality, and you do not need to use your own money to do that, this is exactly why, for example, you should get a Fivers account and test it on there. Or if you don't want to do that, test it at least on a demo account. So you can see, is it working in reality? The bonus of testing it with a Fivers account is, of course, if it works, you will probably sooner or later reach the funding stage and start earning with it, right? But of course, just from what you wrote here, I cannot say how likely is it going to be that it's going to be profitable. What I can tell you is that I had strategies where, like the one I was talking about, this option strategy that I want to live share starting in January now, January 5th, is that what I can tell you is that quite often, actually, I have strategies that beautifully work in backtest, where I did everything I need to do, to my knowledge at least, to make sure I've accounted for all those little crooks and nannies that can spoil your strategy. Like I said, slippage, fees, spread, swaps, and so on and so forth. And then it ends up still not working in reality for whatever reason, because there's something in your backtest that you didn't notice that maybe was flawed, or you were not stringent enough in your walk forward validation. You did not have enough data, a large enough data set for validation. There can be many, many mistakes, but the thing is, you will for sure almost 100% for sure encounter these mistakes, but the important thing is to learn from them, go back and do it better the next time. This is how we learn. Yeah, Scott, good to see you, by the way, Scott. I think you are the Scott that has communicated with me on TradingView, right? If I'm mistaken on this, sorry that I'm mixing you up right now, but I believe you are. The best algos will not lose their edge because it's using price action, which will never change fact. Yeah, I don't very much believe in price action due to the fact that I've backtested price action extensively and I could not find really a valid edge for price action. That is like the typical price action patterns, at least there are. I know there are some traders here, for example, Victor, who use a lot of price action, and for them it works beautifully. I haven't found an edge in that, at least that is suitable with the strategies that I'm using. Could be, of course, or it's very likely because of the strategies that I'm using. So, it's probably because my strategies are not prone to be gaining more edge with price action. Let me formulate it like this. Black Mamba trader saying, isn't that retail algo would be less effective than institutions? The amount of testing and effort is uncompetitive to us. Yeah, absolutely. I think what you're referring to is that institutional traders, of course, have more resources at their disposal than we as retail traders usually have. So I can give you actually an example from my own strategy development. There, a while ago, I was working on a micro order book strategy for cryptocurrencies, primarily Bitcoin and Ethereum. So basically, it would pass live order books with 20 levels from exchanges and look for patterns that make it able to forecast, is price going higher or lower within the next 15 minutes. And it turned out that actually you can make a forecast for that. However, it doesn't give you a tradable edge simply because other institutions out there are doing the same and are faster in the order executions. So when I can execute my order, for example, in 90 milliseconds, they can execute their order within 10 milliseconds or even some nowadays within nanoseconds, meaning they can front run me. They are already in the market until I can react. Sometimes they are already out of the market until I enter my trade. So in order to catch up with this, I would need more resources. I would need bigger and stronger servers closer to the exchange of choice. So you very quickly rake up a heavy bill, sometimes millions of dollars per year, just to stay competitive. And this is, of course, for most retail traders out there, myself included, not viable, right? We don't have like an IT and research budget of like 8 or 10 million that we can just put into stuff like this. So yeah, it's you have to be very, very it's quite hard to find your edge in algo trading on the lower timeframes, at least on the very low timeframes. If we look at something like 15 minutes, 30 minutes, it might be different already. Forget about stress, become a machine. Who knows? Maybe machines are stressed too, and we just don't know it and don't understand it. Okay, thank you for your answer, Sandesh. I am 100K funded already using the same strategy, and I don't care about swap and commission. I take on 30-minute time frame, and I take only on gold. So wonderful. Exactly. If you are on the 30-minute time frame, probably not holding on to your trades for a very long time. Of course, then swaps usually don't play a super crucial role for you. Maybe depending on what time you take the trade now and then you will pay or receive a swap, but it's nothing you probably need to take very much into consideration. For you, it's more about spreads and fees then, which are, I think, at least very low on the Fivers. You made a decent amount of money on your personal too. Well, great. So then, why should it? If that is working already, I think there's a very high likelihood that it's going to continue to work in 2026 for you, if you not suddenly change anything that doesn't need to be changed. It's sometimes something we as humans like to do as well, right? We have a winning system, but we still think, it can be better, it can be better, it can be better. So we start changing things, and then it doesn't. We change it to the worse. But congratulations, Sandesh. Very, very happy always to see people here commenting that are funded traders already, that are successful, that are the proof that this is not just hearsay, that there are really people, if you are diligent, if you put effort into it, that you can at least have a higher probability of becoming a funded trader and starting to earn money really through your trading. Yeah, I want 100K too. Buy an account, get there, and that's automatically. What is the best algo website? I don't think there is a best algo website. That's the thing, if you have a successful algo trading strategy, you are not going to share it with the public. So in my case, for example, the algo trading strategy that I told you that I want to share with you starting in January, I'm not going to share with you, of course, what exactly happens in the background. So how the logic is that trades are initiated. I'm only going to share the results with you, because why should I do that? Because I would be risking losing my edge, right? And so any algo trading website, in my opinion at least, that you find out there, you really have to ask yourself, are they selling you some trading bot or some ready-made trading algo strategy? What is the incentive to do so? Is there the incentive maybe, that you have a high buying price for that? Is the incentive maybe that that they earn commission of your trade, so they are incentivized if you trade a lot, if you over trade a lot with that algo trading strategy? So my suggestion here, and by the way, I still want to do like a special on that. I have to talk to Jonatan about that. Let's see, maybe we can do that in January already, about algo trading, about especially how to use AI to at least start getting into algo trading, to backtest strategies, to ideas for strategies, to see all the traps out there, especially when using AI and LLMs that are out there, where things can very quickly go wrong with you still believing that you're on the right track. Let's see if we can do a special on this, but there is no best algo trading strategy or algo website. This is like asking, give me the best trading strategy. Here we go, Scott. And it's you. Good. Good. So pleasure to meet you here. A bit of a one-sided meeting. Just as a background, Scott and I, we've been communicating on TradingView, a bit back and forth, and I super like that Scott is very creative when it comes to taking his trading strategy and putting his own spin on it. I think you describe yourself a bit like a mad scientist, so has been sharing a lot of good ideas and kind of incorporates really what I like and how nowadays trading should be. So he's saying, I'm currently working on some stuff using multi-moving average envelopes that design with special calculations. They work. Try putting 4 moving average envelopes together using different sums. And this is exactly what's all about. You get like an idea nowadays with tools like TradingViews, like Claude Code. You can very quickly, or even ChatGPT for that matter of fact, you can very quickly test your strategies and see, do they really work? Do they hold up to time? Just 2 years ago, I had to painstakingly code my own indicators, even Python, or if I wanted them for TradingView in PineScript. And that takes a lot of time, a lot of back and forth, a lot of debugging. Now I can do that, within half hours to see like, hey, is this an idea that is working? Oh, it's not working. Okay, then I'll scrap it. Saved myself 6 hours just now that I can spend on other stuff. And I think, Scott, you are doing that very well. So I very much enjoy talking with you or writing with you on TradingView. Yes, you can have, at least if I read this correctly. So, Remy, if you're in the background, correct me if I'm wrong there. You can have 2.5K accounts at the same time. I'm sure there are traders out there that have reached 4 million. However, I personally don't know any of them. I know that some of the people that you see on the live streams as hosts here have very large accounts with the Fivers, yes. But of course, I cannot spill the beans because those people probably wouldn't like that. You're confused how sharing hurts you. Weird. Well, let's say you find a strategy that has an edge. But most strategies are not indefinitely scalable. So your strategy might work up to a trading volume of, let's say, 10 million or whatever. But by sharing it and showing and proving to people, hey, this is a profitable strategy, suddenly a lot of people with like 100 or 200 or 500 million dollars in trading volume per trade come into the market front running you or making your strategy lose its edge because people are front running you. So you have to be very, very difficult, or they adapt your strategy and find an even better strategy that siphons the winnings of your strategy. So you need to be very, very careful with stuff like this. That being said, awesome. Usually in strategies like this, like the one with options I was showing you, there's a lot of work involved, and I mean, you sit there and maybe you've put in all together until the strategy is live, not even saying it's earning money already, just until the moment your strategy is live and trading on, for example, a Fiverr's evaluation account. Maybe you put in with research, with coding, with everything, 200, 300, 400 hours of work. I bet you would also sit then and say, well, why should I share this for free? And if I share that, if I consider sharing this would have a high price tag probably. So it's something else, if somebody approaches you and say, hey, I want your strategy, I'm going to pay you $10,000 a month for it. Of course, that's something else, but not for free. Yeah, like I said just now, to my knowledge, you can have up to 2.5K accounts at the same time. Correct. All right, guys, we still have 13 sweet minutes with each other. So I would like to take the opportunity. I know a lot of you guys are in gold currently still, and I would like to have a quick look at gold as well. So I want to look at three different ways to look at gold currently. The first one is my short-term trading strategy on gold. I said it earlier, ended a long trade at 4,473. We already stopped out on that trade. So my stop loss triggered there already. And so out of that trade, gold has been a little bit choppy lately for me, not one of my most profitable assets, to be honest. Then there's the way of looking at gold on the daily chart with my beautiful 8 weeks moving average and with my beautiful bull market support bands. I said it in the beginning of the stream. Should we now see something like this happening in probably not today, but who knows, maybe tomorrow, maybe New Year, maybe on Friday, on the 2nd or next week, should we see testing the grounds again at the former all-time highs? So I'm talking about the area here of around 4,390 to 4,400. Make it a round number, 4,400. For me, for sure, that would be worth trying a long trade there. Why would it be worth? Because I think the likelihood of us, after just making a new all-time high, bouncing off at least for a bit again is very high. And you can have your stop loss for a position like this beautifully placed between the 8 weeks moving average and the current line of support, the yellow line here. So this is the trade I would choose here with a risk reward ratio of 2. Although risk reward wise, it's a bit hard to say, how high could we go? One maybe method to kind of, at least in a non-scientific way, get an idea how high could we go could be something if we look at Fibonacci extensions. So if we take this whole move here and have a look on how could it extend. And you can see I drew this arrow actually for a reason there, because this is where the 2-point 0.236 0.236 Fibonacci extension is. So that would be for me a typical target for a trade like this. And if I put my take profit just slightly under this, I don't want to put it really exactly at the number. We're talking about a risk reward ratio here of 2.26. So for me, that would be just simply from a support resistance point of view, combined with what is a good R for a trade on average, a trade I would like to take. Yes. The third thing we can look at it, and this is the one I believe the least, is just experimental, is if we look at something like Elliott wave. It's a concept I never understood. I think it's very confusing. This is why I quoted an indicator for that at one point to take the work off my shoulder. There it says currently, yeah, we have a target of 4,560, but we need to be careful. We need to take profit. This is what this Elliott wave analysis indicator, by the way, has been telling us from since before Christmas, if I'm not mistaken. However, this is nothing experimental, nothing I would ever use for trading, because I don't understand what is going on with Elliott wave. And if I don't understand what is going on, if I don't understand why something comes to the reason to enter a trade or not to enter a trade, then I'm not going to do that. Sorry, I just reading through some of the comments. Yeah, no, it's not about. I really like your comment here, Black Fox 87, by the way. But I agree with you. Nobody can explain to you, or nobody has discovered how markets by the end of the day really move. Because if they did so, that would be, well, first of all, worth a Nobel Prize, and probably would lead to like the system destroying itself and being replaced with something that's even more complicated. Maybe you have, I don't know if you have ever read Douglas Adams, The Hitchhiker's Guide to the Universe, where he says, like, if somebody figures out how the universe works, the universe is going to self-destruct immediately and is going to be replaced with something that's even more complicated to understand. And I think, in a sense, it's probably like this with the financial markets. I think financial markets on an algorithmic level can be a little bit compared to weather system. It's easier to forecast what the weather is likely going to do with an error margin in the next 5 minutes than it's going to do what how the summer next year is going to be. In Germany here, they every year they always tell you this is going to be an iconic winter, and we are end of December. I yet have to see snow here, at least in the area where I live. So it's not about understanding or how the market is working. It's about partially understanding or partially discovering patterns that repeat itself and that you can translate into a working strategy. We have Lewis, who sold gold. Nice. Pretty good trade, my friend. Very good. Happy for you. It's a bold bet, always selling gold, in my opinion, at the moment. NASDAQ. Yes, Scott. I think Ralph Elliott made the rules so complex that means anything goes. I think so too. There are so many exceptions, and it starts all with how you count the waves, and I never understood it. I think we need to ask Jonatan maybe tomorrow about it, if he understands it, because he has that he's a technical analyst, at least on paper. Yeah, I also think the market is like the chaos theory, and like the biggest puzzle in the world, and you are happy if you find one or two matching tiles to each other in this puzzle of 1 trillion pieces, because that means you get to see a glimpse of a bigger picture, what the market really is, and that you have a slightly higher chance of finding something that might be profitable. I want to quickly delete this horrible Fibonacci retracement. I don't know why I choose these colors for that. Somebody asking about NASDAQ earlier. Well, right now I am short NASDAQ, as you can see from the last position here. And long term for NASDAQ, I said it in the very, very beginning of a stream. It would be very, very typical. Where is my NASDAQ here, guys? I need to get a new mouse. I always scroll my mouse up and then it bounces back again. And my wheel on the mouse is damaged. Here we go, NASDAQ. I said it in the beginning of a stream. So usually what you'll see in stock indices around the world, or let's say stocks in general, is that we kind of tend to have a year-end rally. If I'm not mistaken, take this with a grain of salt because I'm not sure about the number. Usually the last week of December in 78% of the time is a positive week because of window dressing going on. Window dressing meaning all the mutual funds out there that, according to their agenda, need to invest in stocks will buy more stocks because in the books, when the cutoff is on the 31st of December, they don't want to show to their customers, especially if it was a good stock trading year or a good year for investing in stocks, which this one was an amazing year, right? And they don't want to show that they are holding on to a lot of cash right now. So I wouldn't be surprised that maybe later today when New York comes in and tomorrow, maybe on Wednesday to a certain degree at least, we are going to see markets trending a little bit higher. So I tend to look more for long signals in the stock markets at the moment. Let me see. Okay, good. A lot of nice comments today. And I see in the background already two gentlemen, Wilhelm and Richard, again, who are, I don't know if they are eager to join, but of course they are more than invited to join. How are you guys doing? Merry belated Christmas to you guys.
Yo, how's it going? Yeah, Merry Christmas, man. Happy holidays to everyone out there. Dirk, how's things?
Pretty good. I got to relax a little bit over Christmas. I took my sweet time to work on some stuff and do coding once my family went to bed. You know, have those silence in the house and I can concentrate on the stuff I love, and gifted myself some RAM or to upgrade my systems for Christmas. Yeah, I know it's like buying gold bars nowadays.
Yes,
Isn't it
it
crazy?
is at this point in time.
How about you guys? How was Christmas? I saw you were streaming on the 24th. You were so diligent. My God.
Yeah, we were on the 24th and I streamed on Christmas Day. It was good. It was a good Christmas Day. It was very relaxed. Had some time with the family. Swam a bit. Did all kinds of just relaxing things that you would typically do around the holidays. So that's what I did.
Nice. Although, is it for you as well? I like, of course, the fact that I'm kind of forced to relax a bit, you know, to spend family time. Of course, I love doing that as well. But at the same time, at this time of the year, I always get frustrated because you have this extended time, like 10 to 12 days, where there's like no liquidity, not much volatility usually in the markets, like normal systems, trading strategies stop just working. So you might as well turn them off all the time. And like, I always feel like, you know, I don't know, I'm playing football or whatever, or soccer as a German, I have to say. And like the coach tells me, hey, you know, you're sitting on the bench now for the next 10 days.
Yeah, and you think to yourself, okay, I'm at my computer. Charts are open, but there's nothing happening. And then you're kind of like twiddling your thumbs and you're like, what do I do? What am I supposed to do? It's like, it's so ingrained in your day-to-day activities that when there's a day that you can't be trading because of constraints from the market, you're like, I should do a thing at home, you know, or I should go and do that, or yeah, it is frustrating, but I think it's a good kind of frustration. It's a good moment for you to kind of just step back and say, you know what, regardless, I can't do anything, so I may as well just...
It's definitely a first world problem, yeah.
Yes, very much a first world problem. I don't have markets to trade because there's a bank holiday. What to do then?
I still remember back in the 90s where the trading hours for the German DAX and the stocks in it, they were always ending like at 4 p.m. every day. So the brokers like advocated, hey, we want longer working times. We want to work until 6 or until 8 every day, which is the only time I ever saw like an occupation promoting or
extended
voluntary wanting to have longer working hours. Exactly.
Yeah. Usually people are like arguing against extra time.
Yeah.
They don't want to work extra hours. They're like, no, can I go home earlier? So yeah. No, I understand that one very, very, very clearly.
All right, guys. So I'm going to make a move. I'm going to see you guys again, same time, same spot tomorrow. Are you guys also on tomorrow?
Yes.
Yes. Yeah, back now until. In fact, you've actually got me every single day this week until Thursday, and then you won't see me all of next week.
Oh,
I don't know. I
okay.
think it's all of next week. You won't see me now.
Okay.
No. Yes.
No.
Yes.
No.
Yeah. You will not see me all of next week. But other than that, it's back to normality for me.
Well, I'm very sure people will the more enjoy having you a little bit more than this week.
Absolutely.
That being said, see you guys tomorrow again and have fun. And hopefully you'll discover some nice trades that I couldn't discover on this live stream today. Take care.
Awesome. Have a very good one. We'll
Bye-bye.
see you tomorrow.
Nice one. See you later, Dirk.
What is up, Will?
What is up, Richard? How is you?
I am gravy, baby, just gravy. Came from a weekend off, a weekend away. Came home yesterday in the afternoon. So this morning has been spent doing all kinds of homely tasks. Didn't get an opportunity once to even look at the market. I haven't got any of my I didn't have any of my terminals open. So this is going to be the first opportunity today for me to actually have a look at the market.
Yeah, it's probably best though, man. To be fair, it's probably best you just take a chill pill, just relax, and don't even like. If you have zero opportunity to look at the markets, then I class that as a good thing. There's nothing worse than having the opportunity to look at the markets, but knowing that you shouldn't. That's difficult. That you gotta really use your self-control to like stay away from the markets. Whereas if you're too busy or you don't have time, then it's like, yeah, brilliant, cool. I can't overtrade, or I can't trade a market that's closed.
Yeah, I mean, like, okay, so the markets are open now, but I mean,
Yes.
last week was a completely different story. But today we can trade as per normal. All the assets are open till normal time, so we can go about our regular trading day today. However, I did not. I had some things that I needed to do this morning, so I have not looked at the market at all. So, well, anyway, how have you been? How was your Christmas, mate?
Dude, it was good. Yeah, it was really good, man. We just chilled, spent time with family. My stepbrother came down. So those of you who know Richie the Scalper, Richie the Scalper, he came down for a couple of days. He just went home, did some family traditions. Yeah, I'm not going to explain the family traditions because they can be quite controversial. Did some family traditions, typical countryside traditions, and then the missus came down, spent some time with her. And yeah, it was pretty good. Got some pretty sick presents from especially my brother and Cece got me some awesome presents, which was nice.
Oh, dude, that's great. We don't generally do gifts, so was a regular haul this year. Let's put it like that. Just one or two gifts, but that is for those that want to give gifts. Overall,
Yeah.
we're not gift.
Yeah, I'm pretty much the same as that. I'm not a big gift person. I don't do gifts. I don't give gifts. But those of you who do know me well, I do love my cigars. And Cece actually got me, because obviously we're going away, and I can't take a massive box of cigars with me. She got me like where's the camera? There you go. Like a customized cigar holder.
Oh, nice.
With my name on it.
Cigar cutter as well.
Yeah, everything. And so that was pretty cool. And then my brother got me Winston Churchill's favorite cigar. It's a Cuban cigar. And Romeo Julieta. So that was really nice. I'm going to have that on New Year's Eve now, or New Year's Day.
Awesome. Speaking of New Year's Day, y'all won't see me. I am going to be AWOL for that day. You'll see me today, tomorrow, and on Wednesday. But Thursday, I am going to be recovering from an evening of laughs and enjoyment.
Laughs, giggles, and alcoholics.
Yes. Let's just answer yes. All of the above.
Yeah, the answer doesn't need to be explained or justified. Just answered with a exactly.
If you know, you know. If you don't know,
yeah. If you know type of attitude.
Yes.
Yeah,
All right.
cool,
for Christmas as well, we also just Christmas Day just very, very chill. Like I said, this weekend we went through to friends of ours.
Nice.
That they live about two hours away from us. We went to go and stay the weekend there. By them, also just relax, just spend time in the hot South African weather. Just baking in a pool, and then once you get out of the pool, you go inside and you kind of just play board games and just eat and eat. And never stop eating.
I like the sound of that. Dude, I've gotten so fat over Christmas. It's unbelievable. Like, I'm actually looking at myself and, like, when you sit down and you wear a t-shirt, you can actually start to see that little layer of fat on your t-shirt. I was looking at myself. I was like, oh, dear. I was like, I need to get straight back in the gym.
I've decided that this time of the year, I'm not going to weigh myself.
Oh, bro, I don't think I want to weigh myself.
Ignorance is bliss. The less you know, the happier you are. So in this case, I intend to be completely ignorant of whatever weight I may or may not have.
Yeah, mate, 100%. Bro, I don't blame you. I wouldn't like to weigh myself right now, so I'm not even gonna bother.
Why do you want to do that to yourself at this time of the year? This is supposed to be a festive, jolly time of year. Why would you go and kick yourself in the groin like that?
Literally. Can you imagine being like, especially like for someone like myself or my brother or any of you guys out there that are training quite hard and trying to make sure that your physique is good, make sure you're fit and within a certain weight category. It would be torturous to look at your weight right now, especially for me. Like I was eating and eating. Like me and Cece went to bed and we were laying next to each other and I was like, babe, I feel sick. She's like, same. She goes to me, she's like, babe, look at me. So I looked at her, she goes, I'm pregnant. Just thought I'd let you know.
With a food baby.
Oh, full on food baby. Like we were so bloated from the food. It was amazing. It was amazing. But yeah, for those of you out there, don't take yourselves too seriously this time of year. Just enjoy the food, enjoy the alcohol, enjoy the festivities and the games, and get back to normality. I say you've got until 3rd, 4th, maybe 5th of Jan. Get the first week of Jan out of the way to wean yourself off the garbage food and the overeating. Then get yourself back into it. That's my outlook on it.
So I don't think it's the sheer amount of food; it's how consistently we're eating. So we don't eat large meals. It's very snacky.
Yeah, fair. It's just grazing throughout the day.
You're just snacking constantly. So you wake up in the morning, you set a few things up, you go and you sit in front of a pool or whatnot. Everybody's just having their morning coffee or whatever. And then the snacks just start. And snacks can range from cubes of cheese all the way through to Maltesers, just
doesn't say Doritos and crisps.
Yeah, it's just a constant food intake, and by the end of the night, you're like, I'm so tired of eating. I'm over this. This is horrible. And then you haven't had dinner yet, and then we're making dinner, and you're like, no.
Yeah. The person cooking with us, your mum, your dad, your family, your daughter, whoever's cooking, your wife. When they say, right, food's ready, and you're looking, you're like, I ate 5 minutes to go, what the hell is ready right now? Seriously, what can we possibly eat that we haven't already?
Yeah, no, it's I don't know. It's this time of year where you what was the word that I wanted to use now?
Indulge.
Discipline. Where discipline absolutely gets tested every single day.
There is no discipline, mate. Don't say discipline gets tested. There's a reason why we turn the computers off, because it's the one time of the year discipline is allowed to exit the building and degeneratism is allowed to enter. So we've got to shut our computers down just in case that temptation of degenerative, non-disciplined trading kicks in. So we've got to turn the laptops off so there's no temptation there.
I've just had a look now at gold, and gold seems to want to sell off for some or other odd reason. What the hell happened to silver as well? Whoa! What's going on here? I mean, it's still... Sorry, it's still going up, but it gapped this morning. Massive gap, just wicked, and then just started plummeting. That's silver, and gold is doing something similar in the sense of here was the open of the day. We didn't even take which date was this? Friday, last week Friday's highs, and then started pushing lower, made a base, continued pushing lower, yet another base, and it's continuing lower yet again. Very interesting.
Very interesting indeed. I'm just running a Wi-Fi test in the back end of my computer because can't tell whether it's the software that's glitchy for me or whether it's my Wi-Fi, but you are robotic and your screen is it's like a 200 ping. It's like... So I don't know if you guys
can... Might be you, mate, because I can see you clearly, first of all, and yes, I can hear you as clear as day, mate.
That's good. As long as you guys can hear me and see me, I don't care. I'm not too stressed. I don't need to see Rich. I'd like to, but it's okay. I'm imagining he's as handsome as ever.
Well, you should see me in a few days or so. I got a bit of sunburn, so that's one of the hazards of being by a pool every single day. This is kind of become a little bit more red. So I'm definitely more sunburned than usual. Check, my arms are a little bit more reddish.
More of that pinky red color.
Okay, so I'm just having a look at gold at the moment and just marking up potential areas where, if this is a correction, where this correction could go down towards. On the 4-hourly, we have only a singular area that can be tested on this most recent bullish push after we had the all-time highs of 4,350. Well, it wasn't the all-time highs. It was the all-time highs was up over here at 4,395. We had a break of that, strong break above that. So potential over here, and then also potentially the previous all-time highs, which was somewhere over here, is also in a potential area to be tested. That's now,
I would like to see gold sell, I think.
Yeah, that's now assuming it's going to carry on pushing lower from here. But these few, this is just on the 4-hourly. I mean, the new all-time highs was on Friday, which was $4,550. That is quite a lot of money for gold. And it's all-time highs. And then from there on, we have started to push very strongly lower. We've broken this most recent swing point. We've just wicked it. We haven't closed below as yet, but still, it is a sign of potential reversal. We have, on the 4-hourly, when we had an opportunity to try and push higher again, we failed. So price on the 4-hourly was pushing higher. We attempted to push higher yet again. We failed. We had this very wicky, very large attempt at sell-off, but then we bought it all back again within the 4-hour candle on the 23rd. Then obviously the 24th, we tried to push higher again at the end of the day of the 23rd, into the 24th. We attempted to push lower. We made a higher low as well as a higher high in relation to the previous one. So we have these nice little swing points over here. That's a high point. And down here is another high. So it's low, high, higher low, higher high, and then that just continued until we reached the all-time highs, all the new all-time highs, which is all the way up over here. So this is the all new all-time highs, lovely for gold. But from there on, when we had this very, very big bearish candle, and then the very next opportunity we had to try and break this attempt at pushing lower, because once again we do still have a higher low over here as well. So higher low, higher low, higher low, higher high, higher high, higher high. So very much in an upward trend on the 4-hourly. But now we're starting to break that low point, and we're very close to breaking this previous one. So it could be that this is the beginning of a downward bearish trend that's formulating on the 4-hourly. Let's have a look down on the hourly as well. We've had a singular attempt over here to try and push price higher, failed and started pushing down strongly. So this area over here is a area of interest. I'm just going to mark that out. I don't have a template for that at the moment. That's fine. I'll adjust. I'm busy adjusting some of the boxes and whatnot that I'm drawing. So yeah. So over here we have a bearish attempted push. The bulls tried to push price higher over here, and then we started pushing lower. So we are now currently, if we just go on today is bearish, very bearish, to be dead honest.
I'd love to see it pull back to about 43.54. I think that 43.54.5.
54.
Yeah, on gold.
Oh, you wanted to go up again first. So 43.54. Oh no. Sorry, 43.
Mm-hmm.
Oh, down here.
Down quite considerably as well.
Yeah, this is 43.56. So that's that last bearish attempt to push price lower.
Yeah. If you look on, are you on the 4 hour? 1 hour. Yeah. If you look on the 4 hour, it's a little bit clearer. Not a huge amount more clearer, but it is a little bit more clearer. You can see that we've got that nice little breakout of that consolidation. I think we'd like to come down and test that. That leg is just way too confident. I'd love to see it pull back a little bit more.
Very, very strong leg. Let's look at the fib just from the last time that price tried to push lower, and we are at the 50% fill of that fib. Let's push it lower. That is almost exactly to that point. So the fib itself, we are way beyond the 50% mark on the fib. Right now, what we are creating is just more drop-based drops. So here we have the initiation of the drop. We have a base, we have a drop. We have yet again another base candle over here. Do I have my bases? No, I have removed all of them. So let me remove those ones just to clear it up a little bit. So all-time high. Here we have drop base drop, and here we have another yet to be confirmed drop, but it is a drop base drop at the moment. So if price were to attempt to push back higher, let's say hypothetically we sweep this low and then price starts pushing higher. This is the very first area that price needs to push through. That is 4,459 to 4,476. And then if that fails, it will then come and test again 4,496 back to 4,520. And then beyond that is all-time highs. For it to push lower, we have an area right over here where price can potentially come and test. That is 4,420 to 4,406. And then this test point over here was this attempt for price to push higher, which is where we are right now. So you can see on the hourly, price pushed up, made a base, continued pushing higher, made another base, pushed higher, another base, and then volumetrically pushed strongly. So this was the very first attempt right over here to try and push the price lower and then failing. And then bar that, it started pushing up, and we're at that point right now. So we have a fair few areas of interest So we're currently at this point of interest right now. And then should this one fail, this will be our very next point of interest before breaking this all-time high area over here, because this is the all-time high, or the previous all-time high that we had that very strong reaction off of. Actually, let me make sure that it is the all-time high one. There we go. Yeah. So we have this area then, the previous all-time high that could be tested, and if that should fail, we can come back to 4356 to between 4356 and 4336. That is now assuming that we continue this downward attempt. That's what I'm seeing at the moment.
Yeah, nice. To be fair, I think I'd like to see that sort of. In fact, I'm not sharing my screen. Left my screen up for you guys. Right, can you can you see my screen? Okay, let me switch over. There we go. To Wilhelm. Right, can you see my screen? Okay, guys.
Yes, we can.
Perfect. Let me know. Yeah. Oh God. Let me know if there's any issues with my screen. Yeah. So again, gold on the 4 hour. I'd love to see it pull back down to this sort of area around here. Now, on the intraday, I think we're not going to see a lot of volatility coming in probably for the next 3-ish weeks. Someone actually said to me, I can't remember who it was. Someone said to me, they're like, "Well, what's your forecast now on gold for 2026?" Rich, I kind of want to say it was you. I kind of want to say it was you that asked me this, because I can't remember who else it would have been. But I haven't done my sort of annual forecast or outlook for gold or for any other asset out there, to be fair. However, I find that we struggle a lot with volatility when it comes to early January. So I like 2 weeks into, like the first week of Jan, 2 weeks into Jan, that's when we start getting the volatility coming in. However, nice little sweep under here. If we can break and close under this low wick here, maybe a pullback and then a continuation, I think we're going to be on this downwards trend now for some time yet. Okay, is it going to load? There you go. So these all-time highs, it's come randomly. I didn't think that we'd have this much volatility to come in and create all-time highs. And I think that's going to be like the last sort of leg this year. I think until then, it's going to be all correctional. I think it's going to be correctional until like the midpoint of January, and then I think we'll start pushing up. I'd like that midpoint, or I'd like that pullback leg to be around here somewhere. Don't think I'd want to see it go much lower. Maybe down here. Can I beg, share, and borrow? There we go. Fantastic. Maybe down here. But that would bring it back down to 4K bang on. So that would be what? What are we at? 446. Okay, so about $500 drop. Maybe then, maybe. Let's have a look on the daily. If it loads. Thank you.
Please load.
Yeah, please load for me. Oh, dude, I don't know. Maybe we'll wick under here. Maybe we'll come under this level here, which is around 3.8. Nah, surely not. Will we come down into this straight lines here into this zone here? Nah, surely. Like I said, I don't know. Without looking, I think we'd have to look at some form of fundamentals for this. But on the daily, this is a really nice POI. Really, really nice daily point of interest. But that price is just under. It's $100 or $50 under 3.5K.
That would be okay. So you're saying that gold needs to lose 25 to 28% of its value within the next following days to reach that.
Only speaking on a technical analyst point of view.
I think there's more than enough structure above that point for it to first come and test.
Yeah, I can't see that happening. I really can't. But on the daily, if I was a daily trader, maybe like a position investor or something, then that would be a really nice point of interest. But I really can't see that happening. I'd be gobsmacked if it does.
That's too far low. Too far low down.
Yeah, for 100%.
Don't
However,
quote, but I don't know. Something needs to go dramatically wrong.
Yeah, 100% that. I fully agree. Maybe to 4,200. Now that I feel would be a bit more realistic.
42,
which would be this area down here.
I mean, still, like I showed on mine, I think there's a lot of structure points that it needs to break through first before it can get to that point. I mean, that is 4,200 is $240 from current price, and there's a lot of price structure that can uphold those areas or uphold it. I think if we are going to push lower, that the potential for us to go lower than 43.36, I think, is low.
Yeah.
43.36 to me is
43.36.
43.36. That was the last time on the 4 hourly that we had like a very strong reaction.
I think that would be my minimum. That would be my immediate POI. I don't think on a higher time frame I'd want to see buys and new all-time highs unless we can come down and just tickle into that zone there.
Yeah, not with the reaction that we're getting right now. Definitely not with this reaction. But I think in general, a good area to test is where price struggled previously. Be it maybe a little bit higher than the previous struggle zone. So areas of consolidation, areas where there were back and forths between the two. And that is kind of like that area. It can probably be enlarged as well to encompass, let's say I don't believe that it should be pushing much lower than 43 flat.
You don't think it should push much lower than 42 flat, do you say, or 40 flat?
43 flat. 4300.
Yeah, 43 flat.
Because, I mean, that was the last area that we had consolidation over a fair few days, because that was the 12th of...
I don't know, mate. I think the only time I'd be a little bit worried is if we push below 4K flat.
I mean, I don't think I would be worried. Why would you be worried? You can still sell it.
Yeah, on an investment buyer point of view, sorry. I wouldn't care if it went up, down, as long as it doesn't go sideways. I don't care where it goes.
Just don't go sideways.
Yeah, just don't go sideways. That's the only thing I would care about if gold went sideways. Yeah, it can go up, down. That's about it. Up, down, up, down, up, down. I really don't care. I can buy and sell. But on a buy-in or an investing point of view, I'd be a little bit more like, wow, what is going on in gold? Like this is a little bit strange. Why is it dropping below 4K? Give 4K flat now. Like, what's going on here? Why are people pulling this amount of money out? Then I'd be looking at my daily POI, thinking, right, like 35.5. Like, what's going on there?
But I think, I agree with that. But like I said, I doubt it will go lower than 4,300 flat. And even if it does, it might not live there for long, I think. Yeah. But I mean, what do we know? We're not trying to predict the market. We're just kind of like trying to react to it.
I was going to say that's why I struggle to predict. I can try and forecast as best as I can, but I'm not a fundamentalist. Like the LJ is a fantastic fundamentalist. So are some of the other guys. Anastasia is another fundamentalist. She's fantastic. But me, I'm a simple technical analyst. You know, I'm a simpleton of the market. So I go, ooh,
Straight.
it's going up, I'll buy. Not, I think it's going to go up, so therefore I'm going to buy because of this. That's not how I trade.
Shall we say hello to everybody in chat?
Yes, absolutely. Yes, that is a fantastic idea. Let's see how scroll up a little bit, guys. We are sorry that we ditched you and abandoned you. We will come later now. Let's go all the way to the top. Let's start with the hellos because I feel like every said hello to us. We haven't said hello to us.
We've got Scott Watterson saying, hello, William and Richard. Happy New Year. Happy New Year to you as well. Infinity, hello, Rich and Will. We've got Louis, hello, Will and Rich. We've got Infinity again asking NAS 100. Scott Watterson, how are you, my friend?
We got Kimber saying, hi, Will and Rich. Yo, what's good? How you doing? Hope you're well. Crypto Knight, good to see you in Crypto Knight. Good morning, you guys. How did you spend Christmas? Getting fat. Didn't get drunk. I didn't get drunk. I was very impressed with myself. Usually, I would answer it with getting fat, getting drunk, but I just got fat instead. So, yeah.
Well, at least half of you has been a good boy.
Yeah, true that. Hi, Will. A look on Euro USD. I shall do that for you, my man. Michael, I'll have a look at Euro USD now, once we've had a quick catch up with chat. Hey, guys. Sorry for the OT. Is the problem solved with Bitcoin USD market glitch? And when will the terminated accounts activate again?
I have zero idea. I did not even know that there was an issue with the terminals. I mean, I haven't been on Discord or on anything like that this whole weekend, so I have zero idea.
Yeah,
what was that? Bring that comment up again.
Oh God, let me try and find it again.
What was the Bitcoin market glitch?
I don't know. Is there a problem solved with? Is the problem solved with Bitcoin USD market glitch? There was a market glitch in Bitcoin, as in overall within the fibers.
And did people lose accounts because of it?
Maybe he's on about like overall within the markets, not with the fibers. Dude, I don't know. Like that's what I mean. I've been ho-ho-hoing for the past couple of days. I've been MIA. I've been jingle belling.
I see on the Discord on the 28th. Maya saying that we are aware of the issue with Bitcoin. Please email support. Let's have a look at let's have a look at crypto Bitcoin 28th.
I tell you what, I'll bring your terminal up because I'm not sure if you're gonna have your terminal or your trading view. So I'll bring your up. There you go.
Okay, so this is the hourly on the 28th. I mean, was it Sunday? When was the issue? I'm not seeing any. I'm seeing a bit of flat price action over here. Let me have a look at. This is on the 1 minute. Let's go on to the hourly. Let's go on to the daily. When was the issue?
I don't know. I'd imagine it would have been over the Christmas period. Okay, there we go. So Garrett is saying it was on the fivers, but now it is solved.
There we go. When did it happen, Getachu Casa? When did this happen? I mean, okay, this is on the daily, so a little bit of sideways action over here, a little bit sideways movement.
Apparently it didn't show on the charts.
It did not show on the charts at all. Then what was the problem? What did everybody experience? Was it like a sudden fall or what? Like what happened? Oh, interesting.
Sure.
Okay. So if it didn't show on the charts, then there's really no point of me looking at this chart at all. Okay, but then I would then just say if it was an internal issue, I'm 100% sure the support group at the Fivers would have that be focused on and sorted at some point. Like,
yeah.
I would never, ever think that the Fivers would want to swindle people. So if you lost your account or if there was like termination issues or something, I would say contact support and just wait. Just be patient. They'll definitely sort that out.
I would say, yeah, definitely contact support.
Sorry, guys. I had zero clue about this. Like I said, I wasn't here this weekend. Last week, Friday as well, I did not have any of my charts or Discord or anything like that open. So I have zero knowledge of this. But I would think that contacting support would be the best thing to do to try and solve that. Bitcoin is selling off, mate.
Yeah, Bitcoin. Is that what time frame are you on there?
This is on the hourly. I'll have a look at the 4 hourly. I'll just zoom out a little bit.
Come to the daily. Problem solved already. Crypto Night. Nice one, awesome stuff. If you haven't had if the problem hasn't been solved, then just go get yourself into the support, and they'll sort you out. Okay, Sigma, Sigma FX, what's good, brother? Good morning, guys. How you doing, my man? Oh, I can go there. Sweet. Buy gold now. N guy saying buy gold now. I probably wouldn't do that.
I mean, it doesn't look horrible, but we do need to first reestablish some sort of higher highs, higher lows. So if this is the low here, and we have this low over here, we first need to break this area up over here, try and push down again and not break this box, basically. And then try and push higher, try and push back, and then on that very next attempt to push higher, I would say there's a potential for a buy.
Yeah, nice.
As it stands right now on the higher time frame, it is bearish. Just on the last, like the last day or so, it's bearish because of what we've explained earlier with the higher lows being broken in this area.
Awesome stuff. Right. Well, I'll tell you what I'll do quick. I'm going to go bring up... Where have I gone on there? I'm going to go bring up the Euro... I'm going to do a bit of a breakdown on Euro USD and GBP USD. And then I'll hand the reins back over to Richard, and he shall take a look at the NASDAQ. So I see that one of you are asking for the NAS. So I'll start with Euro USD because that's what one of you guys requested. I bought myself a new laptop, so something that can handle the power or everything that I'll be demanding of it when I'm in Hong Kong. And I'll tell you what, it's so much better. It's faster, and the screen's the exact same size, but it feels bigger and it feels more sturdy. So you'll have to be patient with me, guys. I haven't got a 49-inch and a 34-inch monitor in front of me right now. I'm working on a 16-inch laptop. So you'll see me like flicking between screens every now and then. So if I don't see your comment, it's because I'm on TradingView. If I don't move my TradingView for a while, it's because I'm looking at your comments. Right. Let's have a look. Also, let me know if you can hear me okay. I've moved my mic over here. So I may sound a little bit more quiet. If I am, I'll just try and shout a little bit.
Don't yell at us, please.
Yeah.
Don't yell at us, please. Stop yelling, Will.
What?
You're yelling so loudly.
What?
No, I can hear your voice perfectly, mate.
Oh, you poor thing.
Yeah, poor me.
Right, Euro USD. We can see that we've got let's just mark out the simple, obvious highs and lows. So let's mark out the highs and lows, see what's going on here, and then we'll be able to go from there. There we go. So we've got the highs and lows. We've got consolidation here. We've got this wick high, which we've actually taken, which is nice. And then clearly in this uptrend, we can see here. So again, if you want to understand whether we're in an uptrend or not, best thing you can do is just get a trend line and follow along, or see if you can get a channel. I don't know what Rich uses, but he has like a channel. How do you get that channel?
What are you looking for? Channel? It's just the box. On the left, there's a little square box.
Yeah.
Just exactly that. Just the rectangle.
Oh, that one there, rotated rectangle.
No, the one just above it. Just that.
Oh, just a rectangle, is it?
Yeah, it's just a straight up rectangle, mate.
How do you manage that then? Maybe it's not, because then it goes like that.
Okay, put it down. Okay, and then grab the side. One of the sides. What do you want?
A channel.
Oh! The channel tool is on the lines one. So top left. That one. A little bit down, parallel channel.
Oh, yes, there we go. Yeah, so there we go. If you want to understand how to identify whether you're in a channel trend or not, either just get a trend line and draw a simple trend line, or Rich uses this magnificent tool, which I've always been interested in which one he actually uses, and I've never asked him this. So now I've asked him, there it is. So it's literally a channel.
You can change the parameters of the channel if you want to, mate. You can.
Fair. Oh, yeah.
The style, the text, everything.
Let's go back to white, because I like my white lines. White lines. But that's my text. Oh, for God's sake, William.
So style, there you can change the color on the right hand side. So I have the 0, the 0.25, the 0.5, the 0.75, and the 1. I have all of them up.
Oh, do you? Oh, you have all of these up, do you?
Except the negative 0.25 and the positive 1.25. So I have the 1, the 0.75, 0.5, 0.25, and the 0.
Yeah, so that makes sense. I'm going to... Do I want a background?
No background necessary, mate.
Yeah, no, I don't want a background. There we go. So, so there you go. And if you want to know where that is, guys, it's top left, go into lines, go all the way down, and it's parallel channel. So thank you very much for that, Rich.
All gravy, baby.
So there we go. So yeah, if you want to understand how to draw a basic identification of trend, get a trend line, or get your parallel channel tool and just straight up draw it up, and that's a good way to identify what sort of trend that you're in. There we go. So let's slowly drop down onto the 1 hour. Onto the 1 hour, you can see that we're still in this major consolidation here. There we go. Are we seeing much? Maybe a little bit of a shift. You know, we've reached this high, we've wicked above this area here. Now we're starting to move back to the downside. We've got a couple of areas of interest. So we've got this zone here, which we are now tapped into quite nicely, which we're holding. We've also got an area down here. They're my two main areas I want to look at. Now, yes, we can also look into this area here. But right now, I'm not going to be interested in this, just purely based on the fact that we are currently here. So we're currently here, so I'm only interested in this area of interest here. If we come straight down, then I'll only be interested in this area of interest here. However, if we come down and start messing about here, then I'll probably look to see what's going on here. Does that make sense? Awesome. I don't know if it does or not, but if it doesn't, then
No, it does. Makes sense. Makes
so
sense to
let's
you.
go down onto the 15-minute. Under the 15-minute, as we can see, this is where we start to see our sort of intraday price action, our intraday structure. So what we want to do there is, now we've got higher time frame points of interest, we want to be able to mark out further highs and lows. So what I'm going to do is reset my chart. There we go. It gives me a good identification on what's happening immediately in front of me. There we go. If we just grab our, again, highs and lows, simple highs and lows, we've got this swing low here, which is actually plotted on the 4-hour. We got this intraday low up here, high up here. Now we just need to wait to see for break and close below or above it. So we got this sort of this high slight consolidation, maybe consolidation on the 5 ish. But it's not too bad. So let's stick on the 15 for a second. So we got this high consolidation, we got this break and close below it, and a pullback into this area here, which we could use as a reason to get in on a trade if we get our fib as well. And there we go. So there could be a reason to get in on a sell opportunity here. For me, it would be incredibly high risk. However, you know, you may be able to get in something. Do we go for low hanging fruit, which would be unless we put a real tight stops on the high. Even then, it's not quite a 1-to-1. Let's see what a 1-to-2 would look like. Okay. So that's a 1-to-2 arm. If you get tapped in, you know, like I said, high risk, but it is there. I'd be wanting to see something a little bit more on the lines of, let's get my, there we go, something along the lines of this. I think that's what I'd like to see, because then we'd have our intraday structure here, which we'd have a continuous trend pullback. That I'd like to see. If not, if we hold this area here,
Will, mate, I can't hear you at all.
Can you hear me now?
There we go. I can hear you.
Yeah?
Yeah.
All right, sweet. So, like I was saying, if we fail to break and close below this level here, and we start moving higher, I want to see a break and close above this 5-minute area. It is a 15-minute high, but it's a very small high, so therefore it's going to be a better 5-minute high. A break and close above, a pullback into this zone, continuation on up, get a confirmation of a higher time frame trend shift or continuation shift here, pullback and continuation upwards. So, no, go away. What have I done? There we go. So that's what I'd like to be looking at. In fact, let's go on to the 5-minute. Yeah, there's not really much of a break of structure up here. It'd have to be this high up here to be broken for me to continue this. And then maybe if we consolidate within here somewhere, pull back and then continuation up. Yeah, that's what I'd like to see, and I think that's my sort of forecast ish on Euro USD. It's looking more probable for sells, but buys are definitely valid there. Hope that answered whoever was looking at Euro USD. Can you hear me okay?
Yeah, I can hear you. Sorry, I was just reading through.
No, it's fine. Just because, like I said, on my screen, you're completely frozen right now. So I don't know if like you can hear me all right or not. So
okay, I can definitely hear you, mate.
Saying hi everyone, what's good, Davide? How are you doing? I'll bring Richard's chart up now, as you can see. So Rich is going to be displaying, and then I know NASDAQ. A couple of you were asking for the NASDAQ. So Rich, if you want to do the NASDAQ, my man.
All right, NASDAQ. This is on the daily. Now the thing about the daily chart is it won't really give you the bank holidays days because there will be no data feed from that. So this goes from the 23rd, 24th, and then it jumps to the 26th. So the 25th is not here. Anyway, so on the daily chart, we have this little bit of a range. So this was the last attempt for price to push higher. That is one area. And then we have this area down here, which is the most recent attempt to push price lower and then failing. Going a little bit left of that, trying to look for an area where price had previously had a little bit of a consolidative high point and a low point. Even though it's not all that large, you can basically have this area over here as one area specifically, which led into a breakout, which was a rally, base, rally, and then another base, and then continuation. So this is the strongest base area in this whole rally point. So I will mark this whole candle over here. That was the last one. Now, when I look at a base area, I do look for the reactions off of that base area when price does come back to it at some point. We had one day, this was in October, we had this massive sell-off, and even that massive sell-off did not push price lower than this base area over here. Now, if I continue towards the right, we get to this area basically where I marked out this bottom section. So this area over here, we had effectively just swept the lows of this area over here, and then we started to push higher from that area nice and strongly. We broke that recent swing point over here, trying to push price lower, and we broke this last swing point over there. But we have not yet reached this high point of, what was it, 2600 to about, or 26,000 to 26,258-ish. So as of right now, we are in this little area right now. So if I just pull this one all the way back, you will kind of see that price is just jumping between these 2 points. Yes, it is descending ever so slightly over here as well as over here, but it's also ascending from this point over here. So if I... So right now there is this attempt to push price a little bit lower. Where can we go and test for that price specifically? Let's have a look. So I'm just going to extend this one. Let's go down to the 4 hourly and let's have a look if there is any area on the 4 hourly where we could potentially test both on the lower price point as well as on a higher point as well. Now, obviously, the higher price point is the most available and most like directly available. You can immediately see 26,000 and above is prices to be tested initially, but let's look if there is a price point slightly lower than that if we were to start going into buys, that we can come and test a little bit more readily. So just this area up over here, that was the last candle, so I'm happy with that. Let's have a look over here. We have a fair few, all of these seem to be equal highs, or very much so close to equal highs. Oh, I don't have my magnet tool on. Okay. So we have 1, 2, 3 equal highs. And let's see, where was the area where price actually started breaking volumetrically lower, and it was on this leg over here. So this last candle is the one that I am going to have as a markup, which is an area where we have literally just wicked into right now over the last few hours from, what was this, from Friday, kind of consolidated on Friday, and it is attempting to push lower. So we're at this area right now where previously we've had 1, 2, 3, 4 equal highs, or effectively equal highs, and it is also a previous, it is a previous area of interest. If you just pull this all the way through, let me just move this one, you'll see that the last time price tried to push lower or push higher, it failed. It created a low swing over here, attempted to push higher, failed, making these almost equal highs on this wick and on this wick, and then volumetrically started selling off. So this candle over here is the most recent attempt. That's even before we reach all-time highs. So what price is this? This is 25,985 and 26,131. So price started volumetrically moving out of that point. It broke this recent low swing, retested it and started pushing lower, retested it a second time, continued pushing lower, retested a third time, didn't even reach it, and then also volumetrically pushed lower. So we're at an area of interest, which is this one right here, which is in line with these attempts over here, even though the attempts are slightly higher. Yeah, that makes a little bit more sense. So we've just missed it. So there is a potential for us to come and test these, or this block over here, where we've had multiple reactions, break, retest, break, retest, almost retest, volumetrically pushing lower. So first and foremost, we are between these two areas as of right now. Let's see if we can find this bottom area to make things a little bit more clear. So I'm just going to delete that one. And let's look for a specific area. Still on the 4 hourly, because we know on the daily we are already stuck between these 2 points. But we want to see where it is an area where it volumetrically reacted from off. So we have the lowest point, which is over here. That's 1. We have a attempt at a rally, an attempt to push price lower, and then a volumetric push higher. So this area over here is also an area of interest. And then we had a push higher, an attempt to push lower, and then another push again. So all of these are bases. But now the problem with them is that they're not strong bases. They're not particularly strong in terms of its pushing power. So generally, you would want 1 to 2 on a 4 hourly time frame. You want 1, maybe 2 maximum, and then just volumetric movement out of that area. And we're just not getting it. We're getting slowed, attempt to push 4. So this is what, 16 hours. It's like 2/3 of a day of it just being in this bearish area, and then 12 hours of it pushing higher, and then another 16 hours of it attempting to push price lower, and then but it's all slowed. So it's very, very methodically, slowly pushing up. So we're not getting these reactions like this, or like strong reactions like this, where you have multiple strong candles in a row. So this is all just a very slow upward arc, very slow. So what we're looking at now is a potential area over here that were tested and then reacted off of a little bit stronger than what it had done over here. The reaction on that same area, if you had to compare it between the two, very slowed upward, but stronger push up higher. Currently on the 4 hourly, I would say that we are not very strong in terms of our bearish attempt. Considering that we had these strong bearish pushes over here, we've come back, we've taken up most of these bearish pushes lower. We've reacted bearishly, but we haven't reacted strongly bearish in relation to how we reacted previously. So I'm still thinking that there is a potential for price to go up. So where can we find an area where price can potentially react to either come and break through 25,753 and then eventually 25,985? So first and foremost, we have a bit of a gap here, which was wicked into and then pushed off of. So I would say, first and foremost, we have this whole candle over here to come and test. Let's see what it looks like on the hourly. On the hourly, it's a little bit lower, but we do have a bit of consolidation in that area as well and an attempt to push lower. So I do like it for an area. We are close to it. We just didn't hit it, but it's not bad. This one over here has had an exact reaction as well, this base area. So rally, base, and then another rally right over here. Yeah, we've had an exact reaction here, but we're slowing down. So this isn't a very strong reaction off of this area, which kind of leads me to the idea that it's not a potentially strong base and that we can potentially push lower. We've had, on the hourly at least, a very strong downward leg over here, and now a little bit of sideways action. So if we are to wait for the New York session, which is going to open up in a few hours or so, we're having a little bit of slow reaction, and then should New York come, New York will give us a very good, clear direction. It's either going to push lower into this area down here, or it's going to try and push up into that area up over there, or at least the high of the day.
Don't forget as well, we got news out at 3 p.m. Medium impact news for pending home sales for the dollar. It's not much, but it may do a little bit of something, I suppose, after Christmas. Maybe.
Is that our news bot for today?
No, I just checked to see if we do have any news out. It's at 3 p.m. Yeah. Also, tomorrow we have got
FOMC meeting tomorrow.
Yeah. So that will be high impact. That will do something in the markets.
So if we just look at, we have an area of consolidation over here that was broken and retested. So consolidation broke. This is on the 15, broke, retest, pushed higher. If we just draw this all the way through, we've broken through and kind of retested this area now. So this isn't a particularly strong area. This area over here seems to me is the strongest one on the 15-minute at least, based on how we reacted initially, but coming out of it, it's not the strongest coming out of that area. So myself, I will wait for this afternoon. To me, there isn't a particularly strong directional bias in either direction. It's not strongly bullish, it's not strongly bearish for me, particularly on the, let's say, hourly and so on. I do not think that there is a very clear direction at this point in time. Yeah, I'm going to stick with that. I don't think that there is a very particular strong directional bias at the moment. The reactions that we're getting off of the areas that I would like to see are very slowed and subdued. There is potential for it to react from here and try and push back into these 15-minute bases, these small little areas of consolidation, or even the highs up over here. But overall, not all that great. I mean, if you just look at this is a downward channel. It looks strong, but it's not particularly great. So this is one attempt. It got broken here now, where what was this candle? Just 1:30 my time. We've just broken above and kind of consolidated ever so slightly. There is a potential that we can try and push back into this area over here. So what would this look like? How far is this? It's weak. It's 50 points or so.
The only issue is with that is we've not really had much of a pullback, and neither have we had much of a continuation plan either. It's just been a little bit. Yeah, it moved up nicely. It reacted nicely to that zone that you've marked out, and it just dropped. Volatility just said, "Yeah, come on, we're off." Nah, I changed my mind. I've fallen asleep again.
Yeah, I don't like it. To be dead honest with you, I really don't like it. I would not trade this.
If someone put a gun to your head and said trade this, though, I think I would be buying up to that orange consolidation zone, or that orange base that you've just marked out.
But it's such a weak area. It's so weak.
Yeah.
Like if you look at what happened previously around this area, it's very indecisive, very sideways action. If you just take the bottom and the top of this whole section over here, it does not look great. So there is a potential for us to come and retest and then maybe potentially push lower, but it is so weak. I mean, when was this? This was 7 o'clock this morning. We had a strong reaction. What does it look like on the 5-minute? Even on the 5-minute, there was a potential for some sells. If we just look at the... Oh, did I delete my sessions indicator? This to me feels like it's Tokyo. So this was a Tokyo breakout retest and continuation lower. What does it look like on the 15? Yeah, this was the reaction this morning. Tokyo low, reacted off of it, broke through, retested, push lower. This I think was the move for now. Now we're just sitting in sideways action. I don't like it. I don't like it at all.
Yeah.
It's very difficult to see now where price wants to potentially push towards, because when it's attempted to push anywhere apart from these two areas, It hasn't been particularly strong. On the 4 hourly, it looks strong to try and push lower, but we first need to break through this lower section down here, which
yeah,
is
100%.
consolidation. So as it stands right now, I'm on the fence with NAS. I will
see a buyer, even if it's just correctional, like on the immediate. I think I'd like to see a buyer, maybe then for that sort of higher time frame sell off.
Another base. Yeah. On the 4 hourly, it is bullish because you have the price action all the way down from here, pushed strongly, attempt to push lower, pushed up, attempt to push lower, pushes up. But from this area over here where we had a little bit of sideways consolidate, it's not ranging, it's very much sideways. We're pretty much just broken through that area and now we're back at it. We want to see how it's going to react in this area. If I just take this whole section, that's basically where we are now. We're in this sideways section. On the hourly going down, yeah, we broke above, consolidated, attempted to push higher, back into consolidation. But every time we're rallying, it's not strong. It's really not a strong movement pushing higher. So on the hourly, it's sideways. On the 4 hourly, it's bullish. On the daily, it was attempting a bullish movement, but we did not make a new high. So we had a higher low, but not a higher high over here as of yet. Doesn't mean it's not going to happen. It's not going to happen. It might only come a little bit later. So we might come down here to try and push, and then eventually start making a higher high.
I think those people who are trying to take high value setups and high value trades, like so close to the new year and so close after Christmas, I think you're going to struggle anyway.
Yeah, I don't know, mate. Like to me, NAS is not very tradable at the moment.
No, that's fair. I don't think there's many pairs out there that are very tradable at the moment. Like no one's trading right now. Any profitable, genuinely good trader right now isn't trading.
Yeah, I have zero interest in trading, and NAS is my predominant pair now or asset now, and I don't want to trade it at all.
Yeah, it makes sense. Yeah, it makes perfect sense.
It's when it rallies slowly. When it drops slowly. Like or it's short-lived. Let's rather say it's very short-lived rallies and drops. Yeah, I'm sorry. Who was it that asked for it? It was.
Oh God, I can't remember now.
It was Samal Quran saying, "I'm looking for NAS scenarios." Yeah, sorry, Sumal. To me, NAS is very undecisive at the moment. On the lower time frames, it's very difficult to kind of like see an area where I would want to react off of. We have large areas of consolidation with very slow areas of, or very short-lived, let's rather say.
But it's the same on all indices. You know, SPY's doing it, S&P, sorry, US30's doing it. They're all doing it. You know, they're all very low market volume.
Yeah, it's very sideways at the moment. I don't like it. I don't like it at all. However, if I was forced, I would not be swinging this at all because there's no clear direction for me. Like I said, if I go back to the daily, we're in this like this mid area where we have the high and the low. We've made a lower high, but also a higher low. So you can almost think of it as we're creating this. Attempted like flag, but where's the pole of the flag? You know, where's that strong like area where it reacted out of to make this flag? You have to go back very far, and then you realize there isn't really much of a pole on it. It's kind of like reducing itself, and is it going to most likely break up because we have been very bullish across the whole year. The whole year has been very bullish. So if we were to converge to a singular area, where price is going to eventually start doing something like this, I would most likely want to see it break up. But will that happen? I really don't know.
Yeah, got a question here from Scott Watson saying, why do the fivers not let you trade high impact news? They do, but they don't. So I'm going to answer what they do allow you to do, and then I'm going to answer why. So I nearly threw my bottle across the room then. Oh my god! I nearly knocked my glass bottle off my desk. Oh, whew, that was, when you get like those shooting pains of panic. Anyway, so they do let you trade high impact news. The only issue is you can hold through it. You just can't trade 2 minutes before or and after. So yeah, they do allow you to open a trade and hold through the news and close the trade after the news. That's absolutely fine, but you cannot trade 2 minutes before and after. And the reason that is just due to the fact that they want to protect their capital and look after themselves as well as the trader. So it just shows really bad practices. If you're going to be high impact trading and just buying 10, 20, 30 seconds before the news, or buying right on the news, it's are you really buying that because you have a strategy, or are you just buying it because you're gambling? So that's the only reason that they do not allow you to trade immediate news release. However, 2 minutes before and 2 minutes after, that's not long at all. So even if you're a degenerate gambler, you could probably still get in on the move. So if it was my prop firm, if I owned a prop firm, I'd make it 5 minutes before and after. But the fivers, they're clearly a very nice firm that allow people to trade high volatility on high impact news events. So yeah, they do allow it, but they don't allow immediate for the obvious reasons.
I see Scott is saying if NAS follows gold, then we'll drop today. I don't feel like there's much of a correlation.
I've not noticed it correlates too much.
Dropping, yeah. Both assets have been moving bullishly, fairly well this whole year. NAS has been pushing bullishly. This is gold on the left-hand side. The whole year on the daily chart, it's been pushing bullishly. The whole year on NAS, we've effectively been pushing bullishly, except for a singular time between February and April where we didn't push bullishly. So I don't really see much of a correlation for the directional movement. Even when there were areas where we had very strong bearish action, this was October or whatnot. If you look at NAS, you will see that it didn't really react the same way. There was a bit of a attempt to push lower, but we had the NAS drop days before gold even started to push lower, and since then NAS has been kind of doing this lower highs, lower lows, lower highs, higher lows, kind of action that it had, and gold kind of did the same thing, and then started moving a little bit higher, breaking that low point. So I don't know. I don't see a correlation, apart from the fact that both of them have been rallying. They're not the same correlation as, for argument's sake, EU and GU would be, which is what, 80% or so correlated. High point.
You have got NASDAQ and S&P.
Yeah, they're correlated.
They're very correlated. That's very much like Euro USD, GBP USD. EU GU is very similar to NAS SPY.
Yeah, but I mean, NAS itself is making lower highs, where S&P is making higher highs.
Yeah, fair.
No.
There's a correlation, doesn't mean it's exactly follows suit.
It's not a one-to-one movement, so that's why I'm saying I haven't noticed the correlation between gold and NAS, apart from the fact that both of them have been, moving bullishly throughout the whole year.
Yeah, fair. Yeah.
Why are we stuck with this instrument? Because that's trading for you, my friend. We're stuck with it. Lagging. Oh, gold is the leader. Oh, okay. So you're saying gold is the one that, and then NAS follows. All right.
Oh, you reckon? I thought. Yeah.
I'm going to do a little bit of backtesting on that. But from what I can see is the correlation isn't like crazy strong. I mean, here, if I just zoom in a little bit, NAS is on the left, gold is on the right. This strong push lower was only eventually followed by a strong push lower by NAS. There was another push attempt to go lower, which was, let's say hypothetically, was this movement over. So if this was the big push lower on gold, that was then followed by this big push lower on NAS. If this was then the big push lower on gold, then that would have been that same push lower. But what happened since then? Is that what we're saying? Are we saying that there is a potential, let's say down over here where we had a little bit of sideways action, that is pretty much where we are now? That's if you go on the fact that the one follows. Or are you saying it's like on a day-to-day basis? Like for argument's sake, this day over here, what was this? This was the 9th of October. So this day equates to this, which is the 10th on NAS, equates to this drop day over here.
Gold all-time highs, then NASDAQ, S&P, etc.
I mean, it makes sense. The idea of an investment medium, people want to put their money somewhere. They're either going to put it into stocks, they can put it into
I think it's just coincidence.
Stocks are rallying.
I truly think it's just a coincidence.
I mean, are there coincidences, or is it correlation, or is it causation?
I don't think it's correlation, no.
But I don't think it's causation either.
You don't think?
No.
Maybe it's like a strange little hybrid of both.
Gold is getting lower. Like, consider this. You do have your capacitors and all of these things that are made from gold, like computer parts and uses gold. Now, theoretically, you can look at if gold is cheaper, obviously when the chips are being made, they are made at a cheaper cost. But should that then not mean that your NAS, they can sell for more, ergo they make more profits? And
it would certainly make their margins better. So it would make their margins better, meaning their profits are going to be better, meaning their investors are going to get more money, meaning the NAS, the S&P, those investment mediums would move at a higher rate and move at a higher price because people would be more inclined to invest with them due to the fact that the production costs would be cheaper.
Yes, that's kind of like what I was like alluding to.
Yeah.
So if gold is going up, then it becomes more expensive just for those parts, just for the gold portions of these mass-produced chips. So then you would hypothetically see the prices of the NAS drop a little bit because it's too expensive now. They're not making, their profit margins are a lot tighter. They're not making as much money. But you're not seeing that really.
No. I don't know. It's an interesting one. Unless you're talking on an investment medium as well, where you're looking at like maybe something's happening with the US dollar, something's happening in USA or in America, and they're like, okay, we don't want to put like maybe external international investors are like, we don't want to put money in America now. We're going to pull out of America and put into gold because gold is that sort of safe haven for like an overall investment. Maybe then. But even then, you're pulling money out of America and putting it into gold, which would then lower the S&P, US 30, NASDAQ, and then it would increase. I can't see how there could be a correlation.
Look, I'm not going to bash it at all. I'm going to spend some time and go and look at how it reacts and when it reacts, if there is some sort of correlation. If Scott thinks that there's a correlation, I think it's worth the idea of at least going and having a look at it in terms of, from a technical standpoint. Let's not even talk about fundamentals. Let's just look from a technical standpoint how it reacts. The NASDAQ and the S&PY make sense because the majority of the companies let's not the majority, all of the NASDAQ is in the S&P 500. So the strongest reactions there between the two is the correlation of it. But in terms of the correlated moves to kind of like say NAS is going to fall because gold is falling, I need to go and check that from a technical standpoint because I've never viewed it as such. Scott is saying it's the machine. Bitcoin, for example, is a liquidity index. There is a technical way to get the liquidity index. So move index, reverse repo, and then yield curve. Okay. And then remember when a crash happens, gold also crashed. Very much so, because now people are pulling out of gold because if there's a stock market crash of some sort, they either want to make sure that they don't lose all of their liquidity first and foremost, or secondly, they're trying to buy up all of that crash. So when it starts pushing lower, now all of their money is stuck in that asset. They can't just go and sell their stocks as readily or as easily, or at least they're not getting as much money back from that stock. So they're kind of like indebted. So they try and...
I think when there's a stock market crash, I don't think gold crashes because everything else crashes. I think gold crashes because everyone's taken out of everything.
Yeah, that's what I mean.
Yeah.
Like everybody is de-investing with the intention of having...
It's not because it's like, oh my god, NASDAQ's crashing, so therefore I'm going to take out gold. It's more, holy shit, everything's crashing. Let's just get out of everything.
Let me recoup something.
Yeah.
For example. It's like that panic buy, panic sell kind of like thing.
Literally that. Yeah, exactly that. There's a question here from Davide saying, William and Richard, do you think it would be interesting to have a ranking or a competition for traders using their recovery factor and profit factor? Sorry if my English isn't correct. Bro, your English is bang on, mate. Yeah, fair play. However...
Are you from Italy, Davide?
However, I don't understand the question. The English is fantastic, but I don't understand the question. So, Rich, if you understand the question, if you explain it to me. If not, Davide, could you explain yourself a little bit, please, my man?
I mean, recovery factor and profit factor are just two mathematical equations or outputs of a mathematical equation based on the information that's already available on your hub, as an example. So your recovery factor is the ability for you to get out of drawdown in your account, and then your profit factor is how much you stand to make on average per trade that you take. So that is based on information that's already available. It's not like a number that is sucked out of the air. So the recovery factor and the profit factor is based on that information. So you're effectively saying that the competition is going to be based on how people are currently trading. So your current recovery factor if you are in drawdown, your current profit factor if you are in profits effectively, or what your profits are per trade, what you stand to make every trade that you take.
Yeah. So, maybe. Wouldn't it just be better to just have a standard competition?
A ranking that considers not only profit, but also how the profit was produced. Okay. So.
Okay, fair. So like a ranking of like an overall general trader, not just congratulations, you've earned the most profit, more of here is your stats as an overall trader.
Yeah, but then in that case, you need to take other stuff into consideration as well as, like for argument's sake, the time in trade, the amount of trades that someone has taken. So if my profit, your profit expectancy per trade is obviously going to be very high if you have few trades, but you go with massive risk to reward. So how would you then compare those with each other? You would have someone that had very high trade amount with very little discrepancy between the rate of return per trade. So very, very close. So risking 1-to-1 as an example. So your expectancy would be a little bit lower, but you have more trades. If someone has a very high risk to reward ratio, their expectancy per trade would pick up, because there's just more there. The amount that they win per trade is just more.
Yeah. Also, guys, fantastic questions from you guys as well. After Christmas, it's awesome to see so many of you coming in straight away. Seeing that we're close to 100 likes, let's absolutely smash that like button. See if we can get to 150 likes in 6 minutes before we switch over and me and Richard leave you guys for today. But in the meantime, we have still got 6 minutes left, so make sure you smash that like button. And if you are new here, make sure you subscribe to the channel, because we are on road to 100k and we are getting ever so close. So like I said, make sure you smash that like button, guys. Smash that like button and subscribe if you're new here.
So David is saying, yes, the number of trades, for example. So that is an interesting thing, because you would then effectively put scalper versus scalper, intraday versus intraday, and swing versus swing. So if somebody's a swing trader that only takes a trade once every few months, that kind of like thing, or once every few like weeks, it would make more sense to have those ones.
So then what if you had like a multitude of strategies? Like, for example, myself, you know, I'll have a swing strategy and I'll trade that, and I'll also trade my intraday strategy. So then, you know, you're going to have discrepancy. It's an awesome concept, and I think the idea is brilliant, but I think we'd struggle to make it work.
Yeah, I mean, consider someone has a swing strategy and they're very, let's say they are very consistent with when they take trades. Like, let's say they take a trade once, twice a week, that kind of like thing. You would need to find somebody that has similar stats.
Yes, yeah.
And then they would then compete over a year, because it wouldn't be fair to have them compete over, let's say, 2 weeks as an example.
Yeah,
they might
exactly.
have 1 or 2 trades. Whereas a scalper, you can say, okay, cool, we get a bunch of scalpers. This person scalps 1 minute, this one scalps 2 minutes, that kind of like thing. They have similar stats. We can have a competition for them trading their strategies against each other to find who's the best scalper, as an example, on the Fiverr.
Well, you could probably find enough data within a week.
Yeah.
You know,
it's a little bit more difficult for the higher time frame traders, because the time that you need to do that trade or that competition is going to be too stretched out.
Yeah. Even over the course of a year, I think you may struggle to find enough data amongst position traders and swing traders. Yeah, it'd be interesting. But not only that, do you think that having that sort of competition would move you away from your overall goal as a trader, or do you reckon that it would motivate you to be a better trader? Like, what do you think? What's the outcome you're trying to achieve with that competition or that rank? Is it an ego tickle? You know, like, you're like, oh yeah, I want to get on the top of the rankings to say that I'm the best swing trader in the Fivers. Is it an ego tickle?
That's generally what competition is, isn't it?
Yeah. Or would there be prizes? Like, you know, like, why would you do it? Because if there's prizes involved to win something, you're potentially going to maybe step outside of your plan, of your zone, to achieve that goal. And therefore, even if it's an ego tickle, are you still going to step outside of that plan? So that's the one reason I don't like competitions.
The thing about competitions is what is there to gain at the end of it? If there is as an example, an evaluation account or something, then in general people are incentivized to be a little bit more gambly. They're incentivized to prove that they can make 100%. I mean, like, what was the recent stats of one of the competitions that we saw? It was a 10K account, and there were people sitting with like close to 10,000 in profit. So that's 100% gain on an account, which is not something that you're readily going to see. And the thing is you see this information very often with competitions. Is like people kind of like full send, they full margin, or they, they have a little bit more of a gambling mindset. And at the end of the day, they think that is replicatable when having an evaluation account or having, a funded account. They think that they can trade it the same way, but you can't. It's you're just going to eventually either lose the account, or you're going to, psychology is going to take over, and you're really going to struggle to kind of like full hold that like gambling mindset. So it's really difficult, I think. I like the idea of competitions purely for the sake of having fun. If you're going to do a competition, it should be lighthearted. It should be with the intention of just enjoying. Look, myself and Will, we used to do this every Friday on our stream. We have a Friday competition, and it is purely for the fun of it. And if I were to lose to Will, on Monday there is a very nice unicorn made of my face. So it's not something you take seriously. It's purely for the fun of it, because I'm not going to trade my actual account the same way that I'm going to trade it on that Friday. That's just going to be stupid. because I'm going to either lose an account and lose a lot of money, or I'm going to make a lot of money and it's not going to be consistent.
Yeah, exactly. I like what you said there. You hit the nail on the head. If you're going to compete and do a competition in trading, it should just be for fun. Jack Esco saying, is there anything that I can do to get better at that, or is it?
Oh yeah, he had a question.
An overtime thing.
Yeah, he had a question. Most of the time, my analysis is correct. For example, price goes the way I think it's going to go. However, my entries need work. Like 50% of the time, I get stopped out before my price goes towards where I think. And then that was the follow-up. Is there anything that I can do to get better at that, or is it just an overtime thing? I would say, in general, go do a bit of backtesting. Take those exact trades that you normally would have taken, and your analysis was based on a certain something, and that analysis that you did, you should have incorporated where you're going to put your stop loss as well. So are you maybe trying to force tighter stop losses because you're trying to make a lot of R per trade, or are you being very objective about where you're placing your stop loss? So go do a bit of backtesting and see where it was that you had initially, according to your normal strategy, placed your stop loss, and maybe see if it's not maybe a bit more a bit better for you to maybe have your stop loss at a little bit of a lower point and then have one-to-ones as an example, and then play around with your risk to reward and stuff like that. I would say go and have a look at what it is that you're trying to do versus what is actually happening. So do a bit of backtesting, and then see where it is that you're kind of like.
In the meantime, let's see how many likes we had. We have had 107 likes, guys. Absolutely awesome. To be the first day back since Christmas. I hope that every single one of you had a fantastic Christmas. And we have got 107 likes. So let's keep smashing that like button, guys. Keep absolutely smashing that like button. Subscribing to the channel if you are new here. And guys, I'm going to have to skew-daddle. I'm going to have to love you and leave you. I'm going to have to shoot because I got a couple of bits that I got to get done. So unfortunately, I can't stay too long and chat with you guys over time, which is a shame. But do not worry, I am back tomorrow. We are both back tomorrow, and you have got me and Richard all throughout the rest of the week. So guys, I thank you so much for joining, and make sure that we leave a massive welcome to the next person coming on. Big thumbs up to them, and I shall see you El Mañana. Thank you very much, guys. Sorry, Richard, I'm gonna have to dip out. I've just had an important phone call. Bye bye.
See you tomorrow.
Merry Christmas, everyone. Hope you had a fantastic day as well.
Shot. All right, so we're just waiting for our very esteemed next guest. So I will just go and have a look at some of the questions or maybe some of the comments. So Scott saying Bitcoin price drops, so liquidity is dropping, so market all-time highs due to the liquidity drop. So price pushes up, tricks all of the traders in, and then crashes. That seems like what it is, but like how much liquidity is Bitcoin providing? But I do like the idea of it, kind of like, it goes to all-time highs, tricks people. Not that I think that there's any like real. But it's just an opinion. It's just an opinion when it comes to what I think of how the market moves. When it comes to the manipulation, I think the manipulation is, I wouldn't say it's a figment or a fabrication. I just think that it is less likely, in my opinion, that it's just people don't put their stop losses at the right place, and then they think, "Oh, I'm being stop hunted," as an example. But I know that's not what I know that is not what you're referring to, Scott. Scott then also followed up, or Davide followed up by saying, "Yes, scalper versus scalper as an example." Like the idea of that competition makes sense because you're putting people with their specific skill sets against other people with the same skill sets. So it makes sense. But the logistics of it is a little bit difficult because a scalper is going to be in, I don't know, like hundreds of trades, maybe even in a day. I don't know what the typical scalper's information is like, but let's say hypothetically they get 50 trades a day. You're never going to see that with a person that does intraday trading. So with scalping, it's very easy. You take a scalper, another scalper, and you put them against each other, and you kind of like see who makes the most money in the shortest amount of time. Fair. Your intraday, you can do that over one or two like a week as an example, 5 days, you get your intraday person just taking a trade and kind of like seeing these two people how they do. But the problem comes in with the swing traders and the position traders, because those ones are the ones that they spend months in trades sometimes. So that's not very appealing in terms of a competition, because people are going to either lose interest, because every day that the person rocks up is like, oh, did you take a trade today? No, I didn't take a trade today, that kind of like thing. So people will maybe lose interest in that. So it's generally it's more entertaining to view, with the idea of having the shorter time frames with the scalpers and the intraday traders doing a competition. Scott Waterson saying then, I wish they would get a competition. You pay less than £200 and then you have a top 10 win the prize. Now, here's the thing. If you have to pay a participation fee, I can guarantee you people are going to be less likely to be gambling. They're going to want to actually put effort into passing their account, let's say, in a legitimate fashion, instead of trying to, gamble their way to a winning an account. You would definitely have less participants, I can tell you that much, because people tend to want to have things for free, first and foremost. And secondly, you would most likely want to take that $200 or £200 and go and buy an evaluation account anyway, because that's effectively then what it would be. It's just you have a lower chance of succeeding if you're competing against someone else. Like, let's say you have 100 people competing with £200 buy-in for that competition, but you've only got a 10% winning. So 90% of the people, 90 people, are going to lose. They're just putting money in with, like, as a raffle, effectively, where it would be better financially. It would make better sense if you took that £200, go and buy an evaluation account and try and pass that, and then your chance of passing it is quote unquote 50%. If you just go on the expected outcomes, you're either going to pass the account or you're going to fail the account. So on a mathematical standpoint, it doesn't really make sense to have people buy in to win an account in that way as well. So you kind of like have this doomed if you do, doomed if you don't kind of aspect when it comes to the competition. Anjika is saying, what do you think is going to happen in 3 minutes? It's pre-market. That was 10 minutes ago. What I usually think when it comes to NAS is we have exactly what is happening here now. We have slowed down movement before New York Open, as an example. If you go and look back at any of the this is not really quite the same, but this is Wednesday last week. We had consolidation, an attempt to push up, touched back. It broke out of the consolidation, touched back into that consolidation zone, and then continued up. So that was just one day. The same thing over here, if I just break that out. This was a bit of a different one on Friday. We had this price movement pushing price a little bit higher. We had a bit of slowdown over here, and then an attempt to push price higher, which kind of then failed and then pushed lower. So today we've had this sideways action. So I'm assuming something like this is going to happen. We're going to either have a break and then a retest and then a continuation. But in general, you either have slowed momentum prior to the open and then the volumetric movement in general. That's what I think. Empress Savvy saying, gold versus NAS. NAS is a tech heavy and volatile. Sharp sell-offs in tech often pushes gold up. So you see negative correlation in stress. So this is going against what Scott has said. In calm uptrends, both can rise together if inflation and growth expectations persist. Very much what I thought was. Oh, hello, Victor.
Ding dong. Ding dong.
How are you?
How are you doing, Richard? How is everyone watching? That was my entrance bell, my doorbell.
It sounded exactly like the original. So I didn't even know that it was
I thought so too. Yes.
Yeah, you caught me off guard. Wow.
Yeah, I knew. That's why I mentioned it. If I wouldn't mention it, then no one would know at all. And I heard a very nice Cessna moving around, or was that a mosquito?
There was a Cessna on mine. Did you hear it on my my mic?
Yes, on yours.
Yeah, there was a Cessna, a plane that just flew over. Yeah.
Yeah, I noticed. So Richard, how are you doing? I didn't want to interrupt. I know, as always. But how is things on your side?
you can interrupt me anytime, Victor. I'm giving you that leeway. You can interrupt me anytime you want. I am good. I'm good. I had a very nice weekend away with my wife. We went to go and visit some friends, and we had our Friendmas, because we don't celebrate Christmas, but we have a Friendmas, and Friendmas to us is just spending time with our friends, and we gift them lovely things and they gift us lovely things, and in general we play board games and we just spend time together because we don't see them all that often. So that's what we did. So I'm doing very good. I feel nice and refreshed. I got a bit of sunburn, as you can see with the redness in my face. It's very
Can't
warm
see
in
it, but good for you, I get, right? Oh, still can see it, but I can see you've been in sun, but it's not red, is it? Oh, it
no, no,
is. Yes, it is.
it's red. I've got a bit of sunburn. It
Ah,
might you might not see it as well now, but when I go and have a look in the mirror, I can see
mhm.
I had some sunburn. But overall, very good. How have you been? How was your Christmas with you and your family?
Great. I mean, Christmas is always great, isn't it? I think, yeah, it's so much exciting leading up to, and then you have this grand finale. Usually it's the same, but it's still great. And yeah, sure, I had a great time. Thank you for asking.
Yeah,
I
sure.
hope everyone watching us as well has been having a great time, whether you're celebrating Christmas or Friendmas. What was it?
Friendmas.
Friendmas, yes. Whether you're
More.
celebrating Friendmas or Christmas or any other mus, um, I hope you had a great time. Um, and if you had a great time, and I'm sure you did, don't forget to be generous with the likes and subscriptions. So there's a button somewhere. Uh, Try to find out where it is, and give us some clicks on that button if you don't mind. We have what do we have in the chat, Richard? I see you're
I
looking
was
at
going through a
gold,
few.
and previously we're talking about NAS.
Just general conversations around the idea of having trading competitions, how the trading competitions can be used as let's say training or education, kind of like what not to do, that
Hmm.
kind of like discussions, and then we were generally talking about a correlation between gold and NAS. Some people seem to believe that there is a correlation, or at least one is a leader and the other one is a follower, and then some also believing that they negatively correlated.
Hmm.
But yeah, so in general, it was the conversation has been leading around those gold NAS correlation and well, not gambling competitions, and how it can be used in on at least let's say educational purposes.
Hmm. Yeah, I think, and was that subject already, rounded off, or were you still in the middle of it? Was it
No,
still in
I think
progress?
in general, I think I've given my my 2 cents worth for what it's worth. It's just an opinion in any way. It's very much just an opinion. But yeah, I think I've kind of
Yeah,
like said what I needed to say.
mm, I think, if I may have my 2 cents, I
You
think,
may.
thank you for allowing me, Richard. um, the contests and championships are what they are, in the sense that, it is a artificial setting where you have limited time, so you have different pressure points than you usually do, and it
Mm,
is there for a reason, to show or prove something. It proves that you can be, you know you can use it as stress test, you can use it um, as a pressure cooker, so to speak, for normal conditions. But as long as you understand and you always contain that contest mentality only in the contest, because contests is not how you trade normally. Normally, you don't optimize for maximum return within a certain period of time, and because when you optimize with a specific period, you don't really you don't really worry about low probabilities things, but high impactful events. Meaning, if this happens, it only happens once a year, but if it happens, it will likely blow my account. In a contest, you will not care about that. You will just go, as hard as you can. But in a live account, on a funded account, you would. So as long as you have the distinction clear that the championship or contest is what that is, it's a contest. It's a artificial experiment with a limited time, uh, and you don't have to care about the lower end of the normal curve,
Yeah.
bell curve. Then it's fine. Then it's completely fine to use it. Actually, it's very helpful because it you it's a way to it's a kind of a standardized way. If you keep on doing the same contest, you can compare yourself and you can have an automatic history of how you did last year and 6 months ago if you're still testing out different things. And I think it's very useful, but as long as you have the distinction right, because if you don't, then it can be actually damaging. I would say if you
Yeah.
can't distinguish them too, and you can't keep your contest mentality in the contest and trade your normal safe conservative mentality outside of contest, if you can't do that, then maybe you shouldn't do the contest at all, because it's no good
Oh,
if you take the same risk behavior, and after the account you're trading on the contest, and you go do the same thing or react or act out whatever happened on the contest on your real account. That has If you do that, you need a reset, my friend, because that's not how things should be done.
yeah.
You will end up hurting yourself, and maybe not maybe, I mean by yourself, I mean the account, not literally physically yourself, but I mean the account, your account, that is
Do more
your
harm than good.
interest. Yes, for sure. um, but I think it's a great experiment, practicing ground, because you could see, for example, that let's say it's a weekly event. If you apply the same rules over and over again, you can see like how many weeks, one one in how many weeks would you blow the account, for example. That's insightful information. That's useful information for your real account. So, um, you know, yeah, I think it's very useful. I like doing it. I get very excited when we have these contests, and especially if it's a 1 hour. But that's another thing.
Yeah, the competitions that we have are generally very entertaining, and they are generally very
Mm.
just fun. That's what I use a competition for. It's for the idea of having fun.
Mm.
I do not necessarily agree that it is a very great experiment for the idea of gaining data. I think it's more it would be a little bit more. I think it would be a little bit more suited towards if someone were to have a demo account and trade the demo
Mm-hmm.
account as if it were a competition account, and then giving yourself margins on saying if it reaches this equity point, I will lose the account.
Mm-hmm.
Because in general, these competitions only last about a week, or they last about 5 days, that kind of like thing. So
Mm-hmm.
in
Mm-hmm.
general, you would have more data over a longer period of time if you had a demo account and then traded with that same idea in mind, giving yourself also these stop out levels and whatnot. And then you can say, okay, cool, I have a 100K demo account, I'm giving myself 10%. If I'm going to trade it as volatile as I can over the next 5 days, and then I do the same thing with 90K, because now I've lost 10K as an example, and so on and so forth.
Mm-hmm.
And also, you can also reset the information, and all of that data you can then download. Where I think it's a little bit more
True.
difficult if you have trading a competition account, let's say with the Fivers, that happens maybe like twice a month, that kind of like thing. I think,
Yeah.
Yeah.
You can still download the 5 first contest as well on my FX book, for example. I'm sure on other online journaling services. And but I see your point. You have one account, and you can do some analysis without having to merge all this information and do. Yeah, I can see your point for sure.
Mm.
Yeah, I think it's. I think it depends on the person as well, and also on how long these contests are, because
Mm.
the longer the contest is, the more useful it is for data collection. If it's
Yes.
1 hour, like we had the very entertaining, very fun, contest we had. It's not very useful for data collection. I mean, it's
No.
good for experience, for entertaining, for
It's good.
pushing
Same.
us to our limits. It makes my heart race, go over 100 just sitting like here, um, of excitement. But that's so far away from my trading
Yeah.
routine that it's not very useful.
Yeah.
Um, but
Very much.
if you have championship, let's say for a month, or even better for many months, for a year, that would be a much better contest to reflecting real time, real life, um, you know conditions.
Mm.
If you Because if you had a 1 year to compete, then you're not going to be going overboard with risk on in the contest. And that's how
Yeah.
you trade normally. You don't go overboard. You typically don't want to, because you still have a long way to go. Same goes for your live account.
Yeah, very much so. Victor, I am going to have to love and leave you. I have one or two things that I need to sort out today before the end of the day, and it's already 20 minutes past 3 in the afternoon by me.
Mhm.
But I will see you tomorrow, normal time, regular time. I think normal time. Yes.
I
I'll
thought
see.
we had an appointment at the abnormal time. What happened?
The abnormal time got changed yet again, like last minute. It's
Ah,
just like these. You know how it goes. You can plan something, and then the next moment it just kind of it's gone.
yeah.
But yeah, Victor, are you alone today? Do you have anybody joining you today?
I'm never alone.
Well, I mean, if you have the voices in your head, we know.
No, I will be. I'll be. I'll be accompanied by someone, a special person coming in about 55 seconds or so. No, I don't know exactly when she is coming on, but I am supposed to be. I'm not supposed to. I am. For sure, I will be accompanied by her soon. So thank you for caring, Richard. You're such a caring gentleman.
Oh,
By the way, I miss my upside down pants. What happened to the post Christmas or Friendmas? Now we're talking. Now we're talking.
upside down pants is always with me, always in here in my
So you're
heart
never
and
alone
on my head.
as well.
Yeah, no, upside down pants is always available. All right, I
Yeah.
really have to go.
Yes, yes.
Victor,
Go ahead, do your thing, Richard. Thank you for being with us. I will take over. Thank you for allowing me to handing over the keys to the city or to the fortress or whatever the
fortress for
comparison
I would
is. Yeah.
say.
Well, yeah, not a mayor. Yes, fortress.
Not yet.
I have no ambition to be that. But thank you for
You can
for
be the mayor of Trade Town, the Fivers Trade Town mayor. Victor, the Moss Trader,
thank you.
is the mayor. See, trader, mayor, it works. Anyway, everybody
Huh.
in chat, I hope everybody has a great day. 2 days really, today and tomorrow, and then the 31st we have reduced trading hours, and then obviously the 1st everything is going to be off. So for the rest of the week, I would say just have some patience and trade only the best setups that you can take. Don't try and force it. There's always next week. Victor, as always, love you. Going to see you soon. I'll see you tomorrow. Bye.
See you tomorrow. Normal or abnormal hours, but see you tomorrow. Bye bye. All right, that was Richard Butler, our in-house upside down pants uh, guy. How is everyone doing? Let me know in the chat. We are getting ready, or am I getting ready? We are already ready, so to speak. So to speak. So yes, so we have someone coming in soon to join us. In the meantime, let's take a look at the chat and the chart in whichever sequence you guys want. Let me check here. Hi, Michael Masitsa. How are you doing? And Davide, great, great viewers out there. Scott Watterson as well. How are you doing? So yes, I can take a look at gold for sure. Some kid. Thank you for watching. Don't forget to hit the like button. Subscribe to the channel if you don't mind, as a as a token of appreciation for our streaming and giving you out hopefully a lot of great insights on the charts. Gotham City. I like that. Yes, I'll be the mayor of Gotham City. All right. Never thought of that as a kid, but not bad at all. All right, so let's take a look. You can see my chart, of course. That is my chart. Let's take a look at how how gold is doing. For a change, instead of EU, let's take a look at gold. Let's take a look very quickly from the higher time frame. We have, let's see if this is, let me double check something in the background. Seems to me like I have to, um, let's take a look. All right, so yes. So hopefully you guys are enjoying the holidays. Um, I can see there is. All right. All right. So on the higher time frames, on the monthly, we can clearly see that the market doesn't have any fresh order blocks or any reversal patterns. It's just one big impulse to the upside. That is gold. On the weekly time frame, we are coming back to retrace last month's candle, but we are already at the end of this month, so that means there isn't a lot of more time to really retrace that completely. So far, I think it looks about 50% retracement of the week, the previous week, not the previous month. Let's take a look how much that is. Yeah, we'll basically already reached the 50% retracement, meaning very healthy retracement as a for a strong uptrend. Nothing else to see. We have this previous broken level, breakout level that could be used as a break and retest kind of a setup, but we're not there, and the actual weekly structure is way lower at 42.29. So basically, on the monthly and the weekly, there isn't anything to be traded, not according to order blocks and quasis in any case. Let's take a look at the daily. And the daily time frame, we have already taken, well, we haven't really taken out, but we are retesting and squeezing this order block, this daily order block, which is um, you know could be a basis for a long trade. So we could be looking for a possible long from here, maybe something in this direction, on the intraday, as the market has pushed and squeezed that demand area to its maximum. And we can already see that by tomorrow, by the end of the day, we would have also a bearish order block. So that would be interesting for tomorrow, since this is the daily time frame, for a possible short pattern or a continuation of that retrace into maybe into that level, that breakout level that we talked about, which stands at 43.81.38, at least on my price feed. So let's take a look on a little bit of a clearer, or zooming in a little bit more. We have some structures from the left. I'll clear them up since the market has already invalidated them. As you can see, I'll take out that possible trade idea as well out. We do have, let me check, do we have a quasi? Yes, we do have a quasi for that possible reversal later on, meaning by reversal, I mean this possible reversal like so. We have a break of that neckline. That is a neckline on the H4. So if the market comes back and it does create leave behind tonight or at the end of the day, a daily bearish order block, then we can trade the H4, use the daily, the H4 quasi that I'm depicting right here for a possible deeper push to that breakout level. That would be a great trade. We could certainly take a look at it in the coming days. Yes, we will be streaming on all the following days or all the remaining days of the year. So we will certainly take a look at that. And actually, we already have a H4 order block here that is where the one of the entry order blocks. Actually, it's the only one so far where I would be interested to see if price would come back to it and then move away in the future. Only if it comes back and only if it aligns with other time frames on the lower time frames as well. So let's take a look at let me take the chat to see if someone wants to check GJ. We can certainly take a look at that. Hi Crypto Night, Crypto Night, I like that. Or is it Crypto O Night? Whichever it is the case, hi. So that's gold. Let's take a look if there is a long trade from or a setup from the current levels, because we are retesting, and that is let me take this out because this line is actually an H4 neckline on the H4. What else? Where else? So that would be the H4 quasi reversal pattern that is looking to be is looking as if it's going to retrace or form complete. Let's take a look from the high. This is the head actually. And what else do we have? We have an H2 entry order block here. Okay, let's mark that as such. That's still on the sell side, and we were looking for the long side. But before we do so, let me check if there's anything else. So so this area is interesting, even though it does not align on the lower time frames. I mean, with with a refinement on the H1, it still is great to trade, in my opinion, meaning this area certainly is an area we want to be looking for a possible short if and when the market comes back later on. That could be tomorrow, that could be a couple of days later, maybe even in the new year. But whenever it happens, I'll be here watching and letting you know if that's the case. So let me go back to look at so do we have a reason to go long from this area? We don't on the H4. That already tells me that I'm not interested in going in taking a trade here. But if you are looking for a long, let me give you some ideas if it makes sense to go long from here. Current levels, we have a 114. That is a lot. That is a strong. Why do I say that? Let's take a look. The daily ATR is at 74. And we have surpassed that. We have exceeded that number with how much is that? That's about a 50%. So it's at 150%. Yeah, about so on the ATR. So its expansion for today has been huge. And there hasn't been any high impact news out there. So let me check here. I would be interested if not with my main strategy, but if I can see some structures being retested like we do here on the H1. It is interesting to look for a possible retracement of this big expansion. By big, I mean 150% its daily ATR, which is significant. We are seeing this daily order block being retested. Let me mark this, and then let's go to the lower time frames. Do we have a quasi that we can trade off? Let's see if that's the case. The quasi is very clear. The neckline is very clear, but did it reach it? No, it didn't. Look at that. Did not reach that neckline. To me, that's a sign of weakness, and I would not be interested in taking if the least the least gold could have done is take out this level before retracing, right? The fact that it hasn't done that tells me that perhaps there's more downside to it, or it needs to do it in the future, but I would only be interested in taking that long after it does so, right? So that means that I will not be interested in taking a long from current levels, at least not yet. It does look interesting, as you can see, the 5 minute order block being retested right here, but it's not a quasi, not in my book. So I'm not going to be trading that, and I'm not even going to be targeting at labeling it as a a entry order block um, on that long. It is reacting to that structure. See that? But still, I gotta follow my rules and not trade that. At least not yet. Maybe maybe in an hour or so when things change. Maybe when it takes out this level. Not maybe. This is the level, at least that needs to be taken for me to be interested in this trade. And if not, then I'm not going to be taking that. All right. So let's take a look at some other pairs. Let's take a look at perhaps, what do you guys say? Someone asked for GJ. Shall we look at GJ? What do you guys say? Let me know in the chat. We have, let's take a look. Calvin Gaming is in progress, is loading up, my friend. Keep on loading, and I hope to see you there when you're completely loaded. Peter, my friend, I hope you had a wonderful Christmas. Thank you for coming in. Says, hey, Victor, tell us about your algo trading experience. Were you able to fully automate your strategy? I tried doing the same, but it turned out to be far more complex than expected. I know, Peter. And to tell you the truth, I haven't been able to automate it completely. I have not yet, but I am in the process of automating. The thing is, it's quite complex. I'm pretty sure if I had a team of coders, I could do it in a couple of weeks, perhaps. But well, maybe not weeks, couple of days. But I don't have that to my disposal, so I'm doing it. And I'm not too keen on uh, um, you know sharing my strategy with any coder. So I'm trying to do it myself, and I'm in the process of doing it. What I've done so far is I've broken it down into smaller pieces, and that's the process. And at a certain moment, I will merge all the different coding, and it will be as you know maybe not 100% the strategy that I trade, but pretty high up there, maybe 80-90% of what I'm trading. And if I can get that, even if the expectancy is less, because it's automated, the potential is huge. So I would want to take that into account for sure. Um Peter has here, there are too many moving parts and only a few components can realistically be automated. Peter, there are ways to do it, um, but you probably have to create a couple of indicators, or at least you have to. There are ways to do it. I've encountered a couple of things that seem not to be able to automate, but there are ways to go around it and actually code it, as good as possible. There's certainly ways to do that. It's all about having rule-based systems, because these rules typically, if they're objective, they can be coded almost always. Hi Kumza, how are you doing, Kumza, my friend? Thank you for coming in. Don't forget to hit the like button and subscribe. All right, so let's take a look at some other pairs, as we have our special colleague in the background getting ready to join us anytime now. You can join as there you are.
I didn't want
We
to
have
jump in between, between what you were saying. So I was waiting until there will be a moment. Hi, Victor. How are you doing?
I'm doing great now that you're here, even better. Anastasia, how have you been?
It's been a while. It's been a while. I was taking almost a full month's break, and I can't believe it's been a month already, honestly. So,
Really?
but
Wow.
definitely
Okay.
better than before the break. It was a much needed holiday, to be quite honest with you.
Nice, nice. And did you, go any special place, maybe Kilimanjaro or
No,
some other places in the meantime?
not. I just had a small escape to Milan, but that's about it.
Oh,
I'm in Portugal, but for a few days only. Honestly, it's been just needed break from trading, because I can't even
mm-hmm.
remember last time that I took a 3 week break from trading at all. I
Wow.
don't think I ever did to the past 9 years. If I'm not mistaken, I don't think I've ever took more than a week and a half break in 9 years of trading.
Now you mention it, I can't remember I've taken more than 3 days out of trading in the last 7 years, I think.
That's this. Yeah. So it's been 3 weeks that I didn't execute any single trade. Can you believe this? Until today.
Hmm. And how does it feel? I mean, do you feel you're missing something?
No, I don't feel like I'm missing anything, to be quite honest with you. The reason for this is that I actually needed to take a step back to be able to
Mm-hmm.
recharge and to reevaluate a couple of things. Because on the last stream, I was mentioning that the past couple of months has been quite difficult for me if it comes to
Mm-hmm.
trading itself. So for me
Mm-hmm.
personally, it was much much needed. Trust me, to take this break, because I wasn't able to focus anymore as much as I needed to be able to make the right decisions. So for the first
Mm-hmm.
time, I was able to actually step away. And I know how difficult it is also to step away sometimes from trading, because we always feel like we're going to miss out on something. We feel this FOMO. It's very difficult, especially when we have colleagues and friends who are also trading. Or we are subscribed to many channels, for example, about trading. And however you turn it, if you trade, you're going to be surrounded by the same exact environment. So it's extremely difficult sometimes to step away and to convince yourself that actually market is not going to run anywhere if you're going to take a break, and taking a break is going to do you more good than harm. So it wasn't necessarily easy, but it did give me a lot of perspective of what I needed, to be quite honest with you. So I'm very happy that I did it, and I feel like it also gave me some kind of perspective that if I'm not gonna, because I started noticing for myself in the end of the year that I couldn't take even a day of break out of 5 days trading, when normally I trade 3 days per week on average. So it started to be quite more difficult to even step away for a day or two during the week. So taking it away completely gave me a different perspective, and just calming down my nervous system as well, to be able to get back into the markets with a different point of view on it as well.
Lovely. Thank you for those insights of your process or your experience and the need, to change perspective. I was actually referring more to while while you were taking the time off. Did you miss trading in the sense that did you have a feeling that you're missing something? You're supposed to be doing something that you're not doing, meaning trading, while you were on the vacation, so to speak.
Why did I decide to take a break?
No, not why, but while. I mean, during the period, yes.
Uh-huh. While no, I think that I still do what I love, and definitely not stepping away from trading, for sure. But that different again, I'm gonna approach it slightly differently as well. Because when you take a break from it, I think it's much needed sometimes to remind ourselves that we trade for life, for living,
Mhm,
and we don't
mhm.
live to trade.
True, true. That is completely true. I totally agree that reframes things to focus on quality of life and not return of of investment, so to speak. Because even though yes, when we are thinking about and we're judging and estimating or assessing our performance, we typically don't take into account quality of life. We only focus on return, on the risk, and so on. But thinking of things holistically, right, in the end, what we want is to optimize for quality of life, meaning trading isn't everything. Trading is a means to an end, and so on. So yeah, no, that's lovely. And I we can see, I'm sure everyone agrees that we can see that the time off has done you well. You look well rested. You look a little bit different in a good way, Anastasia.
Thank you, thank you. I'll take it
Yes,
as a compliment.
it is. It is. It is.
Thanks a
It
lot.
surely is. So, are you trading right now? Are you already back? Are you just stepping
Uh,
in,
I
closing
took
first?
my first trade in the past 2 weeks, just before our live. Yes. So I'm
Okay.
in the
Okay. All
trade
right.
now. I can share my screen if you want.
Sure. Let's go to your screen. Yes.
So that's a trade that I'm currently in. And I'm selling gold basically after the gold already declined more than 2% over the
Okay.
past 24 hours. So I did
Okay.
a couple of things on it. I caught up on it, and it broke my
Mm-hmm.
zone that I was looking for. And I sold it right after it broke the next volume level, and it's now going a little bit. I'm expecting it to go a little bit lower. I'm already break even on the straight. So if it goes slightly lower, I'm gonna take profit, and I'm gonna also enter a buy here again on the reversal for gold. So I'm expecting it to go slightly lower and then take a buy from here. So
And
that's
it is going lower as as you're speaking. Where is that buy just because it's exaggerating the move, or do you actually think it could go much higher from that rectangle? That
no
what level is that? 440.
pullback. I would say I'm more expecting the pullback towards an N 44, 44.5, and that's a futures
Mm-hmm.
zone as per always. So I'm not
Okay.
really expecting it to go much further. Down from here, I'm expecting a
Mm-hmm.
slight pullback, and that's what I want to take just a couple of points from there. So I do hope that it can actually hit my take profit now.
Mm-hmm.
It's almost there. The reason for the pullback, the reason I'm expecting the pullback from here is first of all because we have the volume here, so that's a dynamic level calculated by delta, so the difference between asks and bids, and this is
Mm-hmm.
a positive balance between asks and bids here, from which it moved higher. So right
Okay.
now, I'm expecting the price to approximately reach this level more or less. My TP is a little bit higher than this, and from here we also had some kind of some volume coming in, the cluster volume. I If the price does close above this small range though, if it closes above 44, 45.8 in the next 12 minutes, I'm not gonna
Mm-hmm.
wait until it hits my take profit. I'm gonna close it manually. So as long as we are below this blue line that I just drew, I'm gonna keep holding my sell. I want
Mm-hmm.
to see if it comes a little bit lower because that's my next volume level. If we close above this range, above the point of control of it, then I'm gonna be closing it manually because I do believe that we might not reach this zone then and just pull back higher without actually hitting my target, and then I'm gonna close it earlier. And the reason I took a sell is first of all because gold already dropped more than 2%. First of all, in the past 24 hours, we had a shift in the volumes. So we see that the price was up, and that was my TP hit actually. So
Yep, I saw that.
yep, and I didn't place my buy limit. So I think actually my
That's live streaming right here.
And that's what you miss out during the stream actually, if you stream and trade at the same time. But that's
Yep.
okay. I think it's enough for me, honestly. That was the first trade of the last 3 weeks, and I'm quite happy.
Where was your entry?
My entry was right here. This is a sell.
Okay.
So that's an entry, and that's a TP from where it's trying to pull back now. So you can
That's a
compare.
nice DP there. That's a nice move. I mean, what is that? Like $30 on gold?
Yeah, so that was entry was at 44.66, and TP is at 44.35. So it's
Hmm.
$30. Yeah, $30.
That's a one contract. How much is a one contract? Just for the viewers watching us,
It
that
was
TP
almost,
right there.
yeah. So if it's $30, it's $30 almost like almost $30 move. $1 is 10. 1 point is
300.
$10, so that's 3,000.
Oh, 3,000. Okay, so one point is 100 then in that case.
Uh, yeah, one tick is $1 and 1 point is 100. Yeah, that's correct.
Yeah. Yeah.
And
All right. So 3,000. Nice way to start your coming back, Anastasia, with a 3K TP live on our live trading room. So I was gonna ask you. No, I'm not gonna ask you that.
why?
So I'm just kidding. I'm just the So are you still thinking of going long here? You had a I
Yeah,
see your
I just went long. I just went
yeah.
long. Close below the zone in the next 9 minutes. I'm gonna close it. But if it's 3K profit, so I'm willing to risk a little bit on this and see if it's gonna go further or not. So I'm gonna wait for the next 9 minutes and
Mhm.
see if it's gonna close above this zone or not. And then if not, I'm gonna pull out of this one. It's not that's just to make a side note because it's a first trade after the previous weeks. It's
Yes.
it's not live account. It's a funded account. So
Okay.
it's not like a live funded
Personal,
like brokerage.
not personal.
Exactly. So it's a proper account.
Yeah, but it is still funded, so it is still real exposure to the market.
Yeah, yeah, but it's better than my account, of course, than my real money. So
All right. That's great. I'm also looking for a possible long, but my reversal pattern hasn't shown yet on the 5 minute at least. So maybe in the in the next hours or so, I might get an entry as well long because you mentioned 2% actually, Anastasia. I was gonna ask you something about your jacuzzi, but I mean that's unrelated to this 30 dollar TP right here. So I said I'm not gonna ask because
oh yeah.
what's the use? But Anastasia, the you said 2%. 2% was the reason you took the short, or was it the reason it grabbed your attention and then you started doing your analysis, or is it 2% something you use? It literally 2% is the level where you are looking for a long,
No,
or a
was a reason.
actually it was first
It was a reason I was looking for the short
for the
initially.
short. Okay.
Yeah, it was a reason I was initially looking for the short because it
Okay.
already 2%. It grabbed my attention, and then I was
Hmm.
thinking about catching the reversal, but I entered the chart and I saw that it was basically not showing long. It was showing the short pattern. The reason for this is, first of all, we had drop below the previous volumes, as we can see here. So we had lots of volume. The price dropped and it crossed with the volume for the first time since the last 24 hours. So it
Hmm.
crossed with the volume appeared above and it kept dropping. This gray zone is one of the zones from which I would be expecting reversal. I wasn't because I wasn't in the market, but normally this zone that I would be expecting
Hmm.
the reversal from. And we can see that the price was stopping here. So it was slowing down. It tried reversing from this zone, but we finally had the drop below it and closure once again. So the retest. So we had the
Hmm.
zone turning from the support zone, if you like use in normal trading terms, right, from support zone
Hmm.
and the resistance zone right here. And at the same time, we had the volumes once again moving lower, which means that the majority of the trades were executed at a lower price. So the market and the market participants are accepting the even lower price of gold at the current moment. So I would take short, even long, even higher actually, right? But I got into the market a little bit late before I was before I jumped on the stream, and the price was already testing this zone. The price was already below these volumes here as well, so that was the reason that I went short finally. Because first of all, the 2% grabbed my attention. It switched. It crossed with the price crossed with volumes here. It dropped lower. It tried to find support. The sellers pushed it through. It crossed with volumes one more time, and then finally I took a short.
And that's a beautiful. How long was the holding time?
Just I don't know, 10 minutes or something.
10 minutes, 3K in 10 minutes. That's a beautiful trade right there. 30, but that's $30 on gold. That's a huge move,
Yeah,
actually.
that was a lucky trade as well, right? So I mean, it's not
Yeah,
something.
because normally, the ATR on gold is normally is now at $74 on average per day, but it used to be not long ago. Used to be 50, even less than that. So $30 now, looking back, is looks like a big move, and certainly for a $30 move. All right. So, are you looking to any other pairs or assets to be trading, Anastasia?
Honestly, not
Or
yet. Not really. I was only looking for gold, and I think I'm gonna stay with gold today. But unless you have something more interesting as well, and then maybe I can look into this too. Because I honestly, it's the first asset that I looked at from the last 3 weeks.
really?
Yeah.
I have a couple of questions for you, Anastasia. Do
Yes.
you employ any do you limit yourself during the holidays, on Christmas, around, before, during, after? Is has your What does your data tell you? Should you take some time off or not?
Normally the Christmas, if we don't take this year, because this year I took a longer break than usual. Normally
Mm-hmm.
I don't trade during Christmas at all. So I stopped trading in the third week of December usually, and then I
Mm-hmm.
restart trading from the first week of January again.
Okay, and why is that? Is that because you just prioritize quality family time? This is the best time to take a time off, or does your data tell you that the market is different and less advantageous for your strategy or for your approach? Which one is it?
It's the second one, because
Okay.
however does it sound, I'm normally this is the first year that I'm learning how to rest and take breaks. I had lots of difficulties with this in the past years, so I couldn't even
Okay.
stop during holidays. I was always focused on work, on trading, trying to, FOMO and all of this kind of things. I always
Mm-hmm.
felt I'm gonna miss out if I'm not gonna be in the market. So it wasn't because I was prioritizing like rest or family time or something, but
Mm-hmm.
it was more because the data is telling me, and my test and the previous experience is telling me that over Christmas the volume is so low that even if I get the trade, it's not going to be filling in my targets, for example, or the price is not going to reach the level that I wanted to reach. So majority of the times it doesn't make sense for me, especially during Christmas, to be in the market because I'm not going to get what I want from the market anyway. So on the other hand, for example, a lot of traders I know that they restart the trading, for example, in the middle of January or after the first week of January. For me, it's different. I normally restart trading in the first days of January because on the flip side, I have data that shows the first days of January are extremely good for me and for my strategy too. Which is funny enough because one of the best trades that I took were on the second, third, and fourth of January over the past years. So
Wow. Nice. Great stuff. Yes, I thank you for that information,
what's
or
your
for
take?
that.
Yeah, what's your experience with this? Did you trade during Christmas this year?
Well, not, you know I didn't, I didn't take any my data tells me that I'm not supposed to be taking any day off based on the performance. So
Okay.
if I have the time available, then there's no reason for me not to trade. But usually the thing is that I don't have as much time available, so I end up trading less. Less screen time, and automatically that means less trades are being taken. I did trade, but no, not as often. And it's not unsimilar, or it's not different than my usual performance
Mhm.
before, during, after. The volume and the contraction in movement in ranges automatically means that less opportunities, but they're still there. But my trade plan adjusts the target automatically, so I will go for nearby targets, tighter targets are so it's okay with a lower volume. But this just the thing is that the market's going to be a little bit low on energy, so to speak.
Yeah.
That's the only thing. But if I have the time, I still and I did trade. So I have done so for last couple of years, and so far I don't data doesn't tell me I need to adjust anything. The only thing is quality of time, quality of life. I mean, meaning this probably have special occasions, special events on during holidays, which makes sense to just take the rest of the day off, or maybe even the rest of the week, but not because of the uh, you know I'm not getting worse performances.
Hmm. So not because of this,
So
because of prioritizing the quality of life, basically, but not
yeah,
your
yeah,
data
yeah, yeah,
uh, is not
yeah,
something.
exactly.
But
I don't go ahead.
is it only during the Christmas holidays, or is it throughout the whole year? You don't need to take any breaks based on your data that you receive from your stats.
There is no special period for me during the rest of the year, anytime during the year, where I see consistently poorer performance. Of course, I have drawdowns, I have bad periods, but there's no pattern in it. So it's not like it's always during holidays or July or whatever. There isn't anything. So far my conclusion is, I should just trade um, all the time that I'm available, and that's it. Not the data doesn't give me the best time to take time off. I just have to take my time off, if that makes sense.
That makes sense. That makes total sense, actually. That's interesting. You are probably the first person that I hear that has, based on the data, no times off during the year. Like no
Yep.
period of time when your strategy doesn't like performs less. So just
Yeah.
quite.
I have. It is kind of a myth, at least from my perspective, that holidays needs it should not be traded. I think that it for a lot of people that could be the case, but it needs to be tested. In my case, that's not the case.
And
I Yeah. So to me, it's a myth. But I mean, it's a great time to take off. I mean, if you're gonna be taking off from trading anytime, then this is the best time to do so. I mean, the end of the year, you get reflective. You can journal about the year, the past year. Actually, Anastasia, how has this year been so far to you? What are the things? I know I'm going from one subject to the other, but that's live streaming. What have you learned this year that you didn't know at the beginning of the year?
oh,
What was the
honestly, I think I'm gonna get back into this question more after I come back after the New Year's, because I'm
hmm
still reflecting, and this year is not letting me go with its lessons. This year was one of the most difficult years for me, and it's the
okay,
second most difficult year of my life, 2025. It's
really?
Yes, it's been extremely difficult. At the same time, it was extremely great in many senses. It
Yes.
was a mix of many things. This year taught me a lot, especially about letting go of control, because I'm a very controlling person in the sense of my life. I need to hold everything in the control. This year told me that to let it go in a lot of cases, because a lot of things that I've planned went completely not as I wanted them to be. Just one second, I'm gonna actually move my trade to break even, and then we can continue to speak, because I closed one trade, but I'm gonna explain now in a second once I answer your question.
No problem, Anastasia. We are here live on our live trading room. While we wait, Anastasia, adjusting the trades after the 3K win in 10 minutes or so, we have we would
Yeah.
like to invite everyone who is not a subscriber yet to consider, actually not consider, just go and hit the subscription button and be a subscriber to our channel. We are on a mission, 100K subscriber, and you can be part of that success story, of our story, reaching out to as many traders as possible. Hit the like button as well, right? Make it possible for the algorithm to spot us and share us to more traders out there who might be needing a hand, might be needing a good example, might be needing some inspiration from some trader. Maybe you're a female trader watching, looking for inspiration. No, here you have Anastasia. Anastasia is a great trader. I don't have to tell you about it. Just stay tuned, and you will see when we discuss the charts. Anastasia, I think you seem to be ready. I can read it on your face.
Yeah, I'm ready. I'm ready. I'm gonna first cover trade and then answer your question if you don't mind. So I
Go ahead.
went short here, right? For those of you who are just joining, I went short here.
Hmm.
I closed it here. I went long again, and I closed it on break even. Well, it got closed on
Hmm.
break even because when the price closed above my volumes here and above the zone, I immediately moved my trade to break even. The reason for this is that the overall direction is bearish. The overall
Hmm.
momentum is bearish. I was going long, quite high risk, catching the reversal just on assumption that we're gonna get a reaction from this level. But in such a bearish momentum, I don't really know how far the moment, like how far that movement is gonna go. So I took it
Hmm.
safe and I moved it to break even, which it was successfully hit. So I took it on two accounts, on actually one on my account finally, and one funded account. On funded account it hit break even. On my account it hit break even too. And then what I did while we were talking, I took a short when the price went again below the zone because I saw the continuation of bearish momentum. I saw that the
Hmm.
price was not pulling back and it went below this week. So normally what I do is if the price reverses from the zone, if I catch the high risk like V-shaped reversal, for example, like here, I need to see that the price doesn't go below the previous lows. So it creates a wick. Usually we have some volume. So this red circle is like a cluster volume that came in. The price closes above. It shouldn't go below the previous weeks. If it goes below the previous weeks, based on my previous experience, it's going to continue basically going lower. So when the price went below this week, I decided that I'm going to close my, oh, well, I'm gonna go short because my buy trade was already closed. So I went short, but I didn't have time. It was moving so fast to go short on this funded account. I went short on my other account, and that's exactly the trade that I was just moving to break even. My entry for the short is literally at this week here. So my other account is having the short entry literally right here, and it's already on break even. So it moved to break even already. So let's yeah, that's good, I think.
That's a beautiful trait right there, and actually, that shows your skills, Anastasia. You saw the momentum from the beginning, by market, having a very bearish move. You mentioned 2% that caught your attention. You saw that it was supposed to be bouncing back from the demand area above where you took the first short. You saw it not, recovering, not reversing. You took the short. You got the big move. You understood that the market could have a bounce from where you got the long here. But very quickly you're flexible, right? And that's, I like that a lot, where you're not, stuck to, it has to reverse now. It has to come up because of this or that reason, and because it hasn't done what you're supposed to do. Right? You kind of like tested the market. The market didn't react to that level the way you wanted. You close the position, actually close automatically by taking break even, and then you enter. You understood that if it's not reversing from that level, that means that the buyers are not going to be stopping further movement down likely, and that exactly is what has happened so far. And on the flip side, I was looking for the 5 minute. If you guys remember, I was looking for the 5 minute quasi, the reversal pattern to get long the area where I believe Anastasia got short. And the remember where if you guys look back in the on the stream, you would see that the market actually never broke that 5 minute neckline, and I assess that to be as a sign of weakness, and likely the market either needs to still break in the future, or it's not going to be a reversal. And that was the reason for me not to touch it to go long. So that's a it's a nice. I keep seeing that, it doesn't really matter what tools you do, what tools you use, if you have, if you validate if they're good, backed by data, they will probably give you the same signals, regardless if you're using, volume profiling, delta, or some other structures like I do with OB and quasis. So Anastasia, you were talking about this year being very difficult for you, and you mentioned um, learning how to let go,
Yeah.
right? um, and how that has, you know basically you were forced to learn that. I so At least so it sounded. um,
You know how it says that life keeps teaching until we learn the lesson? I think that's exactly what happened this year, fairly to be fairly honest. But I'm very grateful for these lessons, of course, because
I
without it,
see.
I wouldn't be able to learn it. So I needed to learn first of all how to let things go. Sometimes, that not a lot of things are in my control, and I found out that to be able to learn it, you need to be comfortable with yourself in the first place. Because most of the times, us trying to control things, I mean, me in this case, right, is because of certain fears or uncertainties, and this illusion of control is
Mm,
necessary to make like my mind, a little bit more peaceful. So to be
mm,
able to let go of control and trust that things are going to happen better, I need to be able to I needed to learn how to find peace with myself in the first place, which are of course is still in the process, on the way in many cases. But I feel like it's better than it's ever been, and it helped me to realize that there was not even one. Lots of things happened honestly this year, a lot of different things, from like financial to trading to business to personal life and family and everything. I feel like a lot of things happen at the same time as well. But it took me to a lot of time and things happening to realize that there was not even one situation in life that I didn't got out from. And I think it's super important actually when things happen to us,
mhm,
to realize that
mhm,
no matter what happened, there was not even one single situation that we didn't get out of better finally, because we're still here, still doing things, living, progress, and working towards it. And I think it's just so powerful, honestly, because it helps me. It helps me in many cases, and also in trading, to be quite honest with you. So those, I think, are two very important lessons, and different other things. I think I can share more after the New Year's when I'm back on the live streams. But it's been quite a year, Victor. It's been quite a year, if I'm gonna be
I'm
honest.
sure. I'm sure. Hearing about you, it sounds like there's a lot of depth in your words, meaning there's a lot of things you've been through that you're trying to synthesize into words. But I can see it, I can hear it, and people can sense it as well, I'm sure.
Yeah,
So
how
I
how
will
was yours?
go, go ahead.
How was your year, though?
Actually, you know, I'm still in progress of reflecting upon it. To be honest, it's been a great year, and there's a lot of changes, trading wise and outside of trading as well. And I'm very excited about the future, because of the promises that futures holds to me, to us, you know. But I have to at the end of the year, I think it's a good moment to look back and count your blessings, before going forward. And the other thing is to, where do I want to focus my attention on? And that sounds vague, and maybe it is still undefined. Uh, but I'm very excited. The year has been very, very good to me. I've had actually last couple of 2 months have been a little rough on one of my strategies, but nothing to. I mean, nothing that I haven't seen before. So it should be okay. And on my main strategy, it's going as usual, as normal. So I'm very pleased. Not going to go into the details, but trading is been very good this year to me. I mean, I've increased my asset under management. I think something like tenfold or so.
Wow,
So
that's
yeah,
massive.
so yeah. So that is funded and private funding as well.
Yeah.
So external funding. So not prop firms.
Yeah.
Anyways, but so yes, I it's been great, but there are many changes, and there's always rooms for improvement. I have so many, not so many, but I have many projects that are still on. I haven't developed completely, and they're still waiting for me to develop further. Like automating parts of my trading, for example. I have like two strategies that I want to work on more in depth, that I hadn't the chance this year. So I want to do that and later on. And to me, I've a couple of things have been more clear, like what I want to do with my trading as well. There are things that I'm just not interested in, even though they may be very lucrative. I'm not interested in. It's not. It doesn't. It's not my style. So I think that's a good thing. Been good year.
Of course, and it's amazing. First of all, I'm really really happy for you. I think you should be very proud of yourself by increasing like an equity that you trade with, in such a year, because and it's so much too, and it just shows how consistent you are to be able to make this happening. And like it's really really great. I'm really happy for you, Victor, and you totally
Thank
deserve
you.
it, because we know how great of a trader you are, and you're one of the most, I think, calm and patient traders I know, honestly. So
Thank you. Thank you. I like that compliment, because I do
that's
think that's a strength. Being patient and calm is something I'm proud of.
yeah, you
Being
should
calm.
be. You honestly should be. It's honestly, because it's not easy. It's not easy, and it's very rare among traders.
What are we seeing here? For those who have an untrade eye, what are these numbers? I mean, there's a lot of traders who have viewers who have seen you in the past, who know that you have these indicators and ways and chart types that are different than others. But for those who haven't seen you before, what are they seeing right here?
This is a footprint chart.
Okay.
That's a footprint chart. It's not a Japanese candlestick, though. It's something else. And it's a footprint chart which shows basically the distribution between ask and bid in every single candle. So it shows every single print of the order in the market from every single trader around the world. So you can see on every single price level at any minute how many asks and bids were executed. So how
Mm-hmm.
many trades were executed on the ask side and how many trades were executed on the bid side. So on the basically, if the cell is painted in red, it shows that we had more bids than asks executed. If the cell is painted in blue, in my case, it shows that we had more asks than bids at this specific cluster, at this specific moment, at this specific price level.
Mm-hmm.
And the brighter the cluster is, the higher is the difference between the amount of bids and asks. So the higher is the disbalance between aggressive sellers and buyers. Okay, so right here, for example, if I'm gonna try to zoom in basically to show it, right here we had, what is it, like for example, 7 XO. It means that we had 7 bids and 0 asks. Here we had 6x12, so we had 6 bids and 12 asks. So here we had more asks, here we had more bids. Accordingly to this, the higher cell, the higher cluster is painted in blue because we had a disbalance on the ask side, and the lower one is painted in red because we had more bids and asks. We had more aggressive sellers and buyers. So by this, I can essentially evaluate the activity of buyers and sellers, and I can have a filter on the tracking the specific amount of volume in each cell. So the cells that are painted in black in this case, they have at least 25 contracts in each cell, which for this type of chart is the appropriate amount for me that I want to notice. So if it's more than 25 contracts in a specific cluster, I want to see how the price closes in relationship to this cluster, higher or lower. And I want to see who was trading in this cluster to see if that was more buyers or sellers, to be able to understand who is now in control in the market. Okay, so and that is not the deep charts, but deep charts is a software, by the way, that is using obviously the footprint charts. I know deep chart, and what you see in front of you is a footprint chart, but on a different software called ATAS. Deep chart also basically shows you the footprint charts in a similar way, right? So it's a different software.
I see. And what is the chart telling you right now?
Right now, I was looking if I should close my sell or not. I had it on break even a little bit higher. So right
Mhm.
here, I was closing if the price is going to go below this volume and below this volume. So what I want to see, the price staying below these clusters that we had more than 75 contracts in one candle here. And below this, I want this to stay below this level because we had multiple contracts here traded, as you can see, multiple black cells. So filter is showing me that in each cell we had more than 25 contracts. So no, in one candle we had more than 250 contracts. To be able to break this level, we had more contracts coming in the market, so more volume. As long as the price stays below this, I'm gonna keep holding my sell. If we break above this, I'm gonna close my sell manually, not waiting until the price is going to hit my break even.
I see. So basically, you're getting looking for the intention of the market based on what they have done in the past. Basically, technical analysis in a different jacket.
Yeah,
Lovely.
I'm essentially managing my trade based on the current order flow. So
Hmm.
right now I'm using order flow charts both for taking trades, for the entry. So I have my analysis overall based on volume on the high time frames. I use footprint charts or the order flow charts to be able to track momentum and timing of my entry. So both for initial entry, I also use them to add to my position, which I'm not gonna do now because it's the first trade that I take in 3 weeks. So I don't really want to overdo it, to be quite honest with you. But if
Hmm.
I would consider adding to my position, I would also do it based on the order flow chart. And I also use order flow charts to be able to know when to exit the trade or exit partially the trade or how to manage my running trade in this case. So the reason I also want to add to my chart right now is because if we go back to the normal Japanese candlesticks on the 30 minutes here, that
Hmm.
I have several levels from which the price might reverse. I was looking at where is the point of control of this candle. So within this candle, we had most of the volume traded here at 44.24.5. At some point, it moved lower. So we are right now at value area of this candle at 44.12. If the price closes below this 44.12, great, I'm going to keep holding it. However, as we can see, it's having difficulties closing below this, and it's trying to create the weak. And it's also trying to, as we can see how the volume is distributed of this candle, we do have some volumes here, which I don't particularly like how the price is respecting it. So I don't want necessarily to see this weak and closure inside of the value area of this candle. I would prefer if the candle body closes below the value area of this candle, which means it closes them below the majority of the volume traded within this candle, which is going to be a
Mm-hmm.
confirmation of the seller's momentum. So right now, I don't want to
Mm-hmm.
add to my position because you see the more volume is still coming, but it's uncertain if this is going to be the buyers winning this fight or not, because right now it's a battle. We see the point of control moved lower, the value area
Mm-hmm.
moved lower again since the candle is still been forming, and there is still 6 minutes until the candle closure. So I want to see, long story short, I want to see the closure of the candle, and I want to see the sellers winning. And altogether, the volume charts and the footprint charts helping me to understand um, who is controlling the market now, what I should do.
Is it fair to say that you're going to wait for the close of this 30-minute candle to make your decision whether or not to hold or not that trade?
Yeah, yeah,
Yeah.
fair. It's fairly yeah.
Yeah, that looks that's great. I'm gonna look at gold from my side as well. I'm gonna switch to my screen so we can get a little different perspective. Maybe it's not different at all. Um, but this is where, if I'm not mistaken, where you take your initial short, and that's the quasi where I it failed to reach the quasi, right? This is what I was referring to you guys. If the market didn't reach the line, didn't even touch it, it was very close, I know, and it looks from afar that it did, but it didn't. And if you compare all the times that it does not reach the level, and the levels, and you have those every times it does not reach these necklines, and you group them into one group, and then you compare to those other points where everything is equal. You have a bullish H1 order block, is fresh and everything, but it does take the neckline out. You compare them, you will see they'll have different statistics. And that's why that phenomena, that behavior right there, that observation made me not want to take the long here at the 5 minute entry order block on the quasi. It looks like a tiny things, but as they say, it's in the details. And these are important. If you do this with your data, you group them depending on certain characteristics of price action, you would see these pattern. It takes this out, that changes the probabilities completely, and if it doesn't, as well. So that is, I believe, you got in somewhere around here, perhaps, I'm not sure, or maybe a
Yeah,
little
it's
bit
somewhere
higher on your short.
the initial short, you mean?
Yeah, the initial short, yes.
Right there, yeah.
Right there, yes, I thought so. I thought so. And in if I look back into, look at my, we have the breakout level, which is about what is that? That is about $10 on my price feed. Still lower, so that could be a level, if reached today, a nice level to look for a possible push, meaning reversal, or not a reversal, but a pullback on the lower time frames. Other than that, you can see that there all the H1 order blocks we had before are likely to be broken, at least. Well, I shouldn't say that. There's still 32 minutes to go, so maybe that's just a squeeze, and price will come up very quickly. We'll see that. But if you look, what I mean is, if you look at the H4, there aren't any structures, right? There's that level, yes, that breakout level that could react. Market could come back and defend it, or that could call the buyers to come to the market. But there's not a lot structured, not a lot of structures. The move that we had that broke that level was very impulsive. So that tells me that, who knows, but I don't see a lot of levels, a lot of structures all the way down to much, much lower levels to stop price. So basically, I only have one thing here, which is that breakout level that we could see a sort of a break and retest of a reaction. So we'll take a look at that as the market reaches into it. And on the lower time frames, you can see the weakness. There's no bullish structures being created. If there's anything, there's that still, that tells us, this price action tells us that the sellers are in control, and the market, even being so sold off, has not been able to create any any bullish structures on the 5 minute. On the 5 minute, bullish structures are very easy to create. I mean, the market does it all the time, even without reversing. You will see them, a tiny bit of buying power coming in, buying appetite, but I'm not seeing that. So that tells me that unless things change suddenly, I see price reaching lower levels, at least reaching that. On my price feed, that is the level of the breakout is the 43 81.38 as well. And I don't see anything. We'll have to see the reaction the price has as it reaches it, but so far it's very, very weak. And as we speak, the market has touched it. There we go, there we go. That's the weakness that the market is exuding, is telling us. And the market is not reacting bullishly. Are you taking any trades here, Anastasia?
Absolutely
Or
not.
are you
About closing mine right now. Almost
okay?
no, not yet, not yet. I'm still wanted a little
Okay,
lower, but I
we're
don't
gonna
think
go to the 1 minute.
trades for now.
Go ahead.
I wanted at another $13 lower.
13. Okay, so you're talking about 60 something, 61 or so. Let me mark that.
Yeah. Now another $7 lower.
7 from here. All right, so yes, market is going straight to your TP. This is a great day. Two nice wins for you if it hits. So let's not jinx it. Let's wait for the market to actually hit it. But as you can see, the market did not react at all to the breakout level, right? The level from where we broke out from before, and that's to me that is there wasn't anything in that move to stop price initially. Maybe price will still react, but so far, looking at the price from the how it broke that level, it tells me that there aren't any structures for the market to react to. So we'll have to see how it reacts further.
I closed.
Um,
If it
you
goes,
closed it?
yeah, I closed my sell now because it missed my target with just $1.50 so far.
Uh
I
huh.
think manually I'm fine, and if the price goes lower and it gives me the good confirmation, I would say that at this point I want the confirmation on the at least 5 minute time frame, perhaps on 15. Then I'm gonna
Mm-hmm.
eventually look for a buy. But for now,
Yeah.
I think I'm good.
I think you're more than good. How many
Sorry.
dollars on gold did you get on the second short there?
Sorry.
How many? Your entry was, where was the entry? Where was the exit?
So my entry, because this is actually CFDs, was exactly at 44. I'm gonna tell you now, 4407.9.
Okay, so 07,
07,
9, yeah,
and my
yes,
take profit was at 4370.4.
70
That's
point.
another $30.
Okay, that's another $30. Anastasia, you're on fire. Six.
Okay.
I don't know if, without going into the details of it, if it's the same exposure you had. The first one was on futures. You had one contract, I believe you had, and this was the last one was on the CFDs.
Yeah.
So, but assuming $30, regardless if it was equal or bigger exposure, that's amazing. That's $60 on gold. That's basically almost the daily ATR in profits. That's
I think I'm good for today.
I'm gonna take my cap off for you, and no, I can't, because otherwise I'm gonna blow my cover. FBI is gonna barge in and get me away. I'm just kidding. I'm not a fugitive. No, but it's amazing, Anastasia. It's amazing.
It's close.
Congratulations. That's
Quite
a
happy about that
um.
one.
I suppose this is not your typical day, is it?
No, it's not my typical day, but if it would be one day a month, I would be happy with this, to be honest with you. So that was my one trading day in December, actually.
Is it? This is your only day you traded, and it was an amazing. Wow, wow.
I actually
You
need
had
to say thank you for the fivers, for you and for Jonathan, because the only reason I'm looking at the charts today is because I was joining a live stream. And because of this, I was reading updates. I barely read anything about the market in the past weeks. I was really trying to take a break from it. And now, before
Mhm,
joining a live stream on the way here, I was reading some updates, what's happening. I saw this
mhm,
about the metals, palladium, platinum, silver, gold, everything is dropping. And then
mhm.
because I was on like joining the live stream, I looked at the chart. So that's based thanks to the fivers, actually.
There you go. There you go.
This-
But Anastasia, that's amazing. That's great. Great stuff. And best of all, it's done live here on the live trading room. So hit the like button, subscribe to the channel if you enjoy this session so far with Anastasia and myself, showing you great examples of trades. The market has left on the 5 minute a nice wick. Are you getting interested in flipping direction and going for that long? What is it that needs to be printed or needs to happen for you to get interested? I know I don't want to push you into getting in trade, because you do your thing. I'm sure I can't even influence you in getting into a trade. But for those who are watching us, me telling that doesn't mean you need to start looking for a long. But for you, Anastasia, what does it need to do
yeah.
for you to get interested for a retracement?
I'm gonna jump on my chart. So first of all, I'm not
Yes.
gonna take this retracement for not anytime soon. Probably the reason for this is that this is my zone for reversal. This red zone or purple, however you
Okay.
want to call it. This is a level that would be the perfect reversal zone. This
Hmm.
perhaps a little bit buffer from these volumes here, which means
What are
my
those?
stop-loss.
If you allow me to interrupt you, what are those? Circles, dark and lighter circles. What are those for the viewers among us who are not
This is
familiar with that?
the same. This is the same thing as I had on the order flow charts. So this is just
Hmm.
a filter that shows me the specific amount of contracts traded in a specific cluster. So in one
Okay.
specific price level, just here it's lower filter, so 25 contracts based on the lower time frame. And
Hmm.
this one has 200 contracts at least in every circle. So each circle is basically filtering out at least 200 contracts traded at this specific price level at this specific moment of time. So right now we see all of them are above the price. That's a bearish sign for me. I would take
Hmm.
a buy if, for example, I would have the circle here, more contracts, the price would pull back, test it, I would maybe take a buy. It's
Perfect.
majority of the volume is above the price still, which is a bearish sign for me. On the flip side, we didn't reach this zone here for a buy. So if the price would reach it from here, I would still consider buying it. So that's what would need to happen. From this level, even if I would have confirmations for buy, I wouldn't take it. The reason for this is that my main long zone is here, which means my stop loss would need to be absolutely giant to be able to make sense of this trade. Because my buy zone is here. If I enter in here, it's assuming that the price goes here, it still can go long. So there is no reason for me to stay to place a stop loss higher because my stop loss needs to
Hmm.
invalidate my ID, which wouldn't be invalidated in this case, right? So in this
Mhm.
matter, I would either wait until the price goes to 43.77, 43.71 on the futures chart, which is about $20 lower from the current level, 2023 on in general, right, on the gold, different gold quotes. Or if the price would pull back here, I would perhaps take short back to the same zone from which I took short initially. I would prefer long, so if the price goes here, if it gives me confirmation, I would consider actually taking long from here, because that's a quite a big zone of volume as well. So that's a very interesting level for me to take long, because this is where the majority of the volume is traded. Was traded from what is it, 12th of December until I think that's Amux, that's a streaming software on the way, or until the 19th of December. So for the week when the gold was consolidating, this was the majority of the volume traded here. So if the price would go to this zone, I would be very interested to take a buy.
Amazing. And you said you're waiting for confirmation. What would that confirmation be if you are able to share that with our viewers?
It's
What is
honestly,
that?
it's a giant list of different confirmations, and basically, I need to see
Okay.
the buyer stepping in. I need to see
Hmm.
the control of buyers. I need to see some buying volume coming in. I need to see sellers failing. Like, for example, one of the ways for me to see it, and one of the things that I'm considering now, is the fact that if we look at the delta, just delta by candle, so the distribution of
Hmm.
asks and bids by candle, we see that from the moment the price started dropping, and even before, we had the majority of bearish deltas. So in each candle, on majority of the candles, we had more bids and asks traded. And if we had
Hmm.
candles where we had more asks than bids, it was barely any, as you can see. You see, so we didn't have such a big difference between asks and bids. Now, this is the first candle from which we had already buyers coming in. So this bearish candle is a divergence candle with delta, because we had lots of buyers, but the price still dropped massively. So now we have another positive delta, which is the only time since the beginning of the drop when we might have two positive deltas by candle in a row, which is a sign
Hmm.
of buyers already stepping in and trying to push the price higher. For now, they are failing, but if it continues like this, and if I can see finally the buyers stepping in, so what I can see is the bullish candle with bullish delta, or for example, their bearish delta with bullish candle, which would tell me that the basically the effort of sellers is failing and is not giving a result, and the price is still going higher. So this is basically what I want to see, and this is what I focus.
Market prices reaching that level right there. I can see it on the regular candlestick pattern as well, that we've reached the level, the TP you had initially. We
Yeah,
are about, what is it, about 10, actually. I don't have anything else. The next structure that I have is an H4 order block, which is about $10 lower or $12 lower than current levels, or 13, which is that similar? Yeah, that is
yeah,
within the
ten
the
dollars.
mantle you have there. Yeah.
$10 actually lower
So,
would be my perfect level for reversal.
nice. Is that yeah, is that the blue line, right?
Yeah, that's a blue line.
Yeah, yeah, yeah. Do you look at into the fundamentals of any of the moves on any given day? Are you strictly volume technical trader?
I look at the fundamentals basically. I look at the fundamentals, but for me, much more. Sorry, guys. Much more important for me is the momentum, not only the
Okay.
fundamentals. So yes, I do look at the reason, but I look at the momentum more. Because right now, for example, for gold is a strong seller's momentum, which I don't want to go against it, even if
Mm-hmm.
basically the price, if the fundamentals would be showing me the bullish reversal. I want
Mm-hmm.
fundamentals to be aligning with technicals for majority of my entries.
Yes, that makes a lot of sense. What is the name of your dog, by the way?
Amore.
I remember that you told us that once. No, I
Yeah.
remember Amore. Yeah, I remember. All right. Odd question in between the technical questions, but that's great. If I let me switch, if you don't mind, to my screen on gold, as we're watching gold here as well, and if I let you, if I tell, if I, if I would be commentate a little bit on price action from my perspective from order blocks and quasis. We had very little bullish structures being created. If you look at the 5 minutes, there's still nothing here that tells us that the buyers are any bit interested. That little lower wick, which is bigger than 50% of that candle, that's the one slight thing you could say, okay, all right, so we hit something there, but there were no follow through. If you look at the lower time frames, let's say we go to the 3 minute, you can see the structures, bearish structures still being created consistently, while there was something here. I know that makes look a bit, you know right there and right here, where you see that buyers are not stepping in. On the contrary, it's the sellers. Now is the first reaction we have on, if you look, even look on the 1 minute before we broke that level. That was the breakout level, right? We
Yeah.
had one structure, one order block that was created before. We weren't even able to reach that, right? So we had the first huge sell off that broke that level. We came back, we were not able to reach that order block. To me, that tells me that so far in that area, sellers, at least at that point, that the market is likely to go and retest this low, and who knows, maybe even go lower. And that happened. Now we are seeing some great, not great, some reaction that you would have expected some time ago, but it is happening here, where you can see that the market is, we had the first, bullish engulfing right here after reaching that level that you were looking for initially, Anastasia. And but still, this is too not enough. Looks like it could be the beginning of something, but to me, if I were to look for, I don't have anything from the left side, so I'm still going to be looking for this level to be reached if I'm interested. Even actually, that's not a fresh order block. Is it maybe a quasi? Can I see a quasi in here? Nope, there isn't. I don't think there is a even there is there a reason for me on the H4 to look for a level? That's the 50% retracement. That's a very nice technical level right there. But actually, if you move this here, you would see that that level, that's 165 64 56 54, is by one pipette or one tick. All right, so yes, that's a nice level there, but it's not something. There's nothing here of interest to me. There's no quasi here, not on the 4 hour, and the bigger quasi. We have only reached the 50% retracement, but I can excuse me, I can already see that we have plenty of structure, so likely that quasi is not valid, the whole structure, I mean. So if I go to the H2, I have nothing, only that H4 structure, which is not part of a, it's not fresh, it's not part of a quasi. So I'm not interested. On my main strategy, I would not be taking any trades here. And if I were to just scalp a little bit, I still need to be convinced that the market is, that the buyers are stepping in. There's a good reaction, but is that enough? To me, it's not. To be honest, that's a nice pin bar right there. It does look like we have a minor shift here in the momentum, but is it enough? Is it something to be, to be? I don't see any reversal patterns at all. To me, the quasi neckline on this level would be all the way up here. The market needs to take this out before I start getting interested in the market. That is the quasi line right there. And so as you can see, the market hasn't reached that, and only after that I could be looking for a possible scalp, not a intraday trade, meaning holding it for maybe an hour or maybe a few, but only a couple of points. If we were to take this out and come back and perhaps retest this level again, this low level, or perhaps something in between. Let me see on the 3 minute. Not really convincing, not at all. Yeah, I wouldn't. I was still not too eager to go long here. I don't mind. I don't mind missing the move, but not too convinced yet that this is the moment and the level where the if we watch this, that level is supposed to be a demand zone or a support line, and we are reacting bearishly on it. What I mean by that is this line was supposed to call buyers. Instead of that, we're now using it as resistance. So sellers are still, to me, in control until we start showing bullish structures and bullish price action. Look at that reaction. That's not what you want to be seeing. You want the market to be creating bullish structures and breaking bearish ones. It's not really doing that yet.
I
So to
agree.
me, we still have to wait.
I agree with you. I have the same point of view that it's not yet ready 100% to go longs
Hmm.
on gold. I don't also have enough confirmations for my longs yet on this one.
Yeah,
So,
I
yeah.
think maybe more time. Maybe the sign will come later. Maybe we break this neckline some other, sometime in the future, or maybe just maybe it's gonna need to go to some structures below, which so far it's not unthinkable because it's been so bearish so far, and who's to say it's not gonna go a little bit further, trapping people, those early reversal traders first, and then before it actually has the retracement that you might be expecting.
Yeah.
So Anastasia, what is your morning routine, trading wise?
So you're asking me after the matter break. Okay. Um, I think we can fall away. So I'm gonna switch to my screen. I'm gonna wait with answering this question until he's back. Now, guys, if you can hear me, can you let me know in the chat, please? Just to make sure that it's not my connection, actually. Yeah, I think it's not my connection. So for the gold right now, what I'm looking for the retracement for a buy is I want to see some kind of confirmation that buyers are stepping in. For now, we have positive delta in the previous two candles, but the two candles are bearish, which for me is showing that buyers are trying to step in, which is a sign that potentially we can see the reversal, but it's not yet ready because the buyers pressure, the buyers how to say it, effort is not yet showing the result that I want. I want to see the bullish candle. I want to see the price going up when buyers are stepping in. And right now, despite the buyers stepping in, the price continues to fall. So that's not what I really want to see for my buys. So this is another cluster volume that just came in, 43.96, more than 200 contracts, and the price is trying to close below it, which is still not a bearish, not a bullish sign, but quite a bearish sign for me. So I'm very careful with now making a decision to go along here, to be quite honest with you. So I'm still waiting. You're back with us.
I'm back. I'm back. I'm so glad you're here, Anastasia, for so many reasons. One is that you saved the stream twice by being here while I was on and off of my connection for some reason. Anastasia, I was just going to ask you, just about to ask you, something completely different. Hopefully, you don't mind the sudden change. But what is your morning routine, trading wise? Do you have a fixed routine you go through in the morning before you start your day? Whether that is yoga. I mean, I know it's yoga is not trading related, but I mean, it can be something you do to start off your trading day in control or letting go, whichever you desire. But is there anything you do, any activity you do that you know that you do it will help you come into trading with the right mindset?
I'm honestly, you're asking me this after this almost 4 weeks of break, 3.5. I'm gonna
Hmm.
be. I cannot answer this question because I'm gonna be recollecting my morning routine. Because I had it in the past, but the past couple of months also we lost Victor again. So the past couple of months, here he is. There he is. He's back.
Yes.
Okay, so the couple of past months showed me that what I was doing is not performing the way I want in the current market conditions. So I'm gonna be recollecting it. As previously, I traded the whole day, so I traded both London and New York session, which is on the
Hmm.
one hand is a positive thing about where I live. Like Europe is a like appropriate place to be if you want to trade both trading sessions. On the other hand,
Hmm.
I've noticed that less is more in the past couple of months, especially with the current market volatility. So I'm recollecting my trading system, and I'm gonna be testing something completely different now since January, where I do not trade in the mornings. I trade
Okay.
one trade a day, and I trade in New York session or before New York session or during the New York session only. So I am assuming that it's going to be also better for my mental state because then I have the mornings for me, which is extremely important for me to do sports and so on. And in the past
Hmm.
weeks, one of the things that I also found out during this break that was much necessary, first time in 9 years, it can give you a completely different perspective, honestly. Imagine this. For the first time in 9 years, I actually realized that doing sport in the morning is much better for me than doing sport after my trading. So my routine right now for the past weeks was that I do sport in the morning. I have like breakfast and other things that I work on besides trading, like afterwards, and
Hmm.
time for me. And then only in the afternoon during the New York session, I'm actually first of all I'm both mentally but also physically ready to focus on trading. One trade like today, maybe two in the same setup eventually, like a continuation of the same setup, and that's it. And I'm off. So that's gonna be something I'm gonna be testing now since January. So
That's interesting. That's interesting. Just for your information, the first thing I do after waking up is working out. I run, and I didn't collect data on it, to be fair, but it just felt naturally better. Do the first thing first, which is taking care of your body. And I personally, what I didn't measure it before and after. Um, but what I did notice is, and I've been doing it for a long time already. But what I did notice is that I seem to be more. I have more energy if I work out. If I have a run in the morning, early morning, first thing I wake up, and I do that, I feel more in control. Basically, I feel I can handle the day better when I do so.
you first thing, not even breakfast, nothing. You go for a run.
I go for a run. Yes, first thing first. I have two glasses of water, and I go basically.
That's I used to do this as well. Actually, it's quite good. I do it a little
Yeah.
different now. I have first
Mm-hmm,
hour and a half of other things, and then I do
mm-hmm,
sport. Just right now, usually running or paddle. It depends on the day. So it's
mm-hmm.
cardio anyway. Then breakfast, then gym, and then 3 times per week, and then the rest like work and trading I can do and all of this kind of things.
Yeah. So I don't know if it's worked for everyone. It has the same. Yeah, perhaps others are different in their profile, in their morning person, if they're a morning person or not. But to me, I used to think, that I was not a morning person, and but I don't. After all, I don't know if that's even true anymore because I you know been doing it for years now, and I perform better in the morning now. And I think it was just a thing of habit that I needed to shift, and the body was to catch up with that. But it's interesting, Anastasia. We are nearing the end of our show. For those who are watching us and think, hey, I like this conversation, or hey, I learned a thing or two in the last couple of hours. I hope you've been watching for hours. Um, I'm kidding, but no, actually, I'm not kidding. Um, hit the like button, subscribe to the channel. You're hearing my inner voices here. I'm just verbalizing them. No, the if you think this is great, you want to see more of us. The best way for you to make sure that is going to happen is by tuning in. And you will see more of us. No, I mean, hitting the like button that will help us be more visible for the algorithms that reign the YouTube channel realm, and help us reach the targets 100K subscribers. We had 90,000 not very long ago, and it was a massive giveaway. So it is in your interest as well for us to reach that 100K. We will be doing another massive, gigantic giveaway. Simply as that. Last time it was 50 free accounts. Just think about that. It was going to be even bigger. 100K, that's even a bigger milestone. So I cannot think that Jonatan is not going to do a bigger giveaway than 50. I'm pretty sure he's going to do it. All right. So, Anastasia, do you have any last? Go ahead.
I'm sure that the giveaway for 100K subscribers is going to be massive. And if you guys can hit it before New Year's, there are still a couple of days left. It's going to be the best gift that you can give to the Fiverr. So please make sure that you hit the like button, you subscribe, you leave comments. Everything that you do here also shares the live stream with more traders. So please make sure that you do this. It's a small action for you. It's a big thing for us at the Fivers. We really appreciate it. And if you like it, if you enjoy it, if you learn at least something during the last 2 hours with us, please make sure that you hit the like button and you hit the subscribe one if you are not yet with us, to make sure that you are here and the next time as well. Gold is reaching my level, which is perfect for a buy, actually, the zone. So I'm waiting. And if we get confirmation, I'm perhaps maybe going to take a buy. So far, as we can see, it's still showing us a bearish momentum. So I'm going to be very
Indeed.
careful. I'm very happy with my results today, so I'm not going to be pushing it any further, I would say. But if it gives a really, really good confirmation, I still, from this zone, going to be looking for the reversal for a buy eventually. So,
Anastasia, I hope you have many of these days where you come in, perfect timing, and hit home runs basically on your trading, trading activities. It's amazing. It's great to see that happening to a fellow trader. Everyone else, join us. We have, yes, we are active on the Discord community as well. We will have in about 44 minutes a live session there on the Fivers Discord server. You're all more than welcome to join us. If you don't know what I'm talking about, buy an account with us, get into the dashboard, and somewhere, I think nowadays on the upper left corner, you will see the Discord icon. You click on that, and that is your entrance into the beautiful world, which is called the Discord server for our traders. So, on that note, Anastasia, congratulations on your day.
thanks. Thank you so much.
That's a strong
Without you and the
comeback.
followers, it wouldn't be possible. So thank you so much.
And that's a very strong. That's the best way to come back from a period of off.
Sure.
So amazing, great stuff. And I enjoyed your company, the conversation, Anastasia. Hope we do this more often. And everyone watching, thank you very, very much. That's it for our stream today. Any last words, Anastasia, just before we go?
I think I'm gonna say more when we are back after the New Year's. But for those of you who are watching, and I'm not gonna be joining anymore from the New Year's, and Victor yourself as well, I wish you a lovely time with your loved ones. Time to unwind, and reevaluate also your year, perhaps what you really enjoyed, what you want to do better in the upcoming year. There are always things that we want to strive towards, and I wish you that all your goals and your dreams come true in 2026, and you are the only one who is control of it. So come back to us in the next live stream, and I'm gonna be back in just a couple of days starting from the new year. So I'm looking forward to see you again, all of you.
Perfect, Anastasia. I'll be waiting for your lessons learned in 2025. That letting go lesson, I think, will be golden. I'll be for certain waiting for all the insights you've gotten on that growth experience. Everyone else, see you guys tomorrow. Thank you for watching. Goodbye.
Bye bye.